A bit of housekeeping as everybody signs up. First of all, in the chat box, which you should be able to see on your screen, let me know that you can see and hear me clearly. That's rule number one. Rule number two, grab a pen and paper. You're going to need it to make some very important notes. Okay, rule number three, turn off the TV, close the door, make sure your family leaves you alone, because this is a very important 90 minutes in which you're getting one-to-one tuition from a hedge fund manager to teach you all the most important bits of trading. So the idea with this webinar is you'll never need to read another book again. You'll never need to wonder if trading's for you. I'm going to give you the best bits of information from the world's leading traders who I've met, who helped me 20 years ago when I wrote my very first book published by the Financial Times. Okay, so I actually did meet them. They're in the book and so on. And then they helped mentor me, and I turned from being a private investor to a professional hedge fund manager. So you're going to get that information plus all the best bits of information from my 18-odd books on trading over the last 20 years and my 200 columns in the FT. My point being that with all that information in here, grab a pen and paper. You're not going to need another book or anything else ever again. Yes, Jay, the answer to your question is yes, indeed. Okay, and make sure nobody else is using the internet. If they are, this will just buffer. You won't be able to see this video. It'll just collapse and fail. Trust me, your internet isn't fast enough to allow somebody else to be watching Netflix whilst you do this. Okay, grab a drink as well. You might want it. Let's get on with it, because I've got some really exciting stuff to cover. The fundamental aim of why we are all here, every single one of you, and if you don't like this message, I'm afraid trading's not for you. The fundamental reason we are all here is to make money. Now, I didn't say, not the first person to say that. It sounds a little bit crass for somebody to say that. But actually, that's what we are here for. It is about making money. All right, that's what trading is about. And more importantly, given that 80% of private investors lose money, it's how to make sure we move from the 80% losing traders to the 20% who make money. Now, in the chat box, we're going to keep this interactive, entertaining, interesting, informative. So in the chat box, any questions you've got, put them in. Let me know where you're from as well. Thomas, AJ, Roger as well, and a bunch of others. Owen, Neil, Sanjay, Glenn, the very talkative and chatty Pritpal, who will tell me every tiny thing that's going on. Welcome to you as well. You'll also see a poll on there. I want you to fill that in. We're going to have several polls during the course of this webinar. And what I'm going to do with those polls is then share the information with you as well, because that's what it's about. Now, we're going to cut to the chase. Let's cut to the chase and just get on with it. Okay, first things first. Right, whenever you're trading, the risk warning is, and we're as an asset manager regulated by the FCA, so they'd expect me to give you this risk warning, but it's also prudent for me to do so, which is, look, you only ever trade with risk capital. I know a lot of people are on these webinars because they're thinking, okay, I need to make extra money to pay down rent, pension, mortgage, or my children's education fees, or my children's rent, education, and so on. Okay, that being the case, never trade in desperation. Never trade thinking, oh, I've got to make this money, because if you do that, guaranteed psychologically you won't make that money. You got to try and trade with a calm mind, and the best way to do that is to know you're only trading with risk capital. Okay, risk capital is the amount of money an individual is able to invest, the loss of which would not result in a drastic change to their lifestyle. Okay, we're also going to, several principles in this webinar are, we're going to start with small amounts of capital. We're going to start slowly, a bit like driving a car, really slowly, because nobody's going to turn the markets off, and then we'll scale up our business gradually. Okay, welcome to Jane from Sweden, Sanjay, Dubai, Thomas, you're in London, Glenn is in Q as well. Lovely. Now, one of the key problems, I'm gonna focus on the problems, and then I'm going to give you the solution for you as private investors. One of the key problems private investors have is they spend way too much time trading daily. Okay, when we did a poll, we got 643 responses in a recent poll that we did. And what we found is the vast majority did more than 1 to 2 hours of trading. That worries me. Because what you had is, what's that? 77% or 66.9% were doing more than 2 hours trading in a day. All right, that is way too much time for most people for a very simple reason. If you're doing that much time in front of the screen, you're going to end up doing low quality trades, trading out of boredom, and getting too little a return on your investment, because the amount of capital you've got and the return you get, divide one by the other, and you've got your hourly rate of work. And guaranteed your hourly rate of work, if you're spending more than 2 hours a day, is going to be less than a guy working at McDonald's. So my job in this webinar is how to solve that problem to make sure that you've got an efficient, time-efficient process, and that you've upped your hourly rate of work, and you're not just generating an income from trading. Because what's the point of generating, say, 500 to 1,000 a month if you're spending all your time as a slave to the screen? I'll have just removed you from one form of slavery to another. That's not good. So what we've got to do in the processes that I'm going to teach you is to make sure they're also time effective for you, so you can spend your time with your grandchildren, smelling the roses, or at the day job. Okay, so bear that in mind in terms of this is a holistic approach. This is not just about, oh, buy here, sell there, Fibonacci, Elliott waves, a few indicators, yawn, yawn, yawn. This is about a broader process, something that you will follow and do. Okay, if you want an analogy, it's a bit like when I go to the gym. No matter what happens, they can't get me to lose weight because all they're ever doing is saying, oh, do these things which are just too difficult. If they give me a holistic approach, which is something I can follow, which is something you can follow, then for the first time in your life, you will actually do it and not be frustrated by it. Okay, so we need a 360-degree view. And as part of that, so first problems, and then we're going to solve them. As part of that, the problems we're going to solve, the agenda, the itinerary for this webinar is on screen. Now, whilst I am about to read through that, let me just share that poll with you guys as well. Will the Dow be higher by the end of 2018? Will the Dow be higher? 67% have said yes, 33% have said no. Now, I'm going to show you that I don't actually care what the rest of the market thinks, whether the Dow is going to be higher or lower by the end of the year, because trading is about how we're going to make money, and it's about two decisions: when to buy, when to sell. That's it. You, me, everybody else, we get the same data, and we've got to make two decisions. When do we buy? When do we sell? So it doesn't help me to know, is it likely to be higher or lower by the end of the year? Because that's too long a time frame. I need to know over what time frame should I be trading, how frequently, with how much money, when do I buy, when do I sell? That's it. Okay, we're going to focus on the simplicity. All right, we're going to focus on the simplicity. Otherwise, what's going to happen is that instantly we're going to be getting too confused. We're going to get too diverted. Okay, Pritpal, stop using the chat room, please, because you're talking about samosas and rotis and you're really distracting. So just shut up. Thank you very much. What we're going to do is we're going to be focused and straight talking, as I always am. These are the things we're going to focus on. There's too much news out there. It's impossible for private investors to weigh. There's too much fake news out there. So I'm going to show you a better approach which is suited to private investors. If you were an institutional bank, I'd say, hey, fine, let's create machine learning algorithms, artificial intelligence, or whatever else, supercomputers to read the news. But for us as private investors, we're not going to try and outsmart the market. We're not going to try and be a smart aleck and say, oh, I think this is what's going to happen to the pound. I'm just cleverer than everyone else. You're not. Neither am I. And I've got a master's degree in economics from Oxford University, and I'm not smarter than anybody else, okay? So I'm telling you, when it comes to the markets, trying to use the news is not the way private investors should be looking to trade. They're not going to beat Goldman Sachs and UBS. If you could, you'd all have your own Goldman Sachs's and UBS's, and so would I. News is not the way we're going to be able to have a competitive advantage, and so that's not what we're going to do. Also, we're not going to trade too frequently. For people who want to trade on the 1 minute bars or the 5 minute, you're going to get too little profit. Why are you going to get too little profit if you trade too frequently? For a very simple reason. If you're trading very frequently, you must only be trading for a short period of time. If you're trading for a short period of time, the moves must necessarily be small, because time and size of move are directly linked. So we can't trade too frequently because there'll be too little profits. We also don't want to trade too infrequently because there'll be too little profits. So how often should we trade? What I'm going to go through in this webinar is a business plan and a process which will show you and say to you, okay, mathematically in your trading business plan that I'm going to give you in this webinar, you should trade this frequently each day. For each month, it means this. This is how much you will make. This is how much you're likely to lose, because you're not always going to win. Okay. Private investors should also, more broadly, not compete with banks. We're going to copy them instead. All the big hedge funds, all the big people who move the markets, we're going to copy them. We're not going to compete against them. What does that mean? I'll explain that in a second. We're going to ride their coattails rather than try and fight against them. We're going to spy on strategies used by billionaires. So how are we going to do that, Alpesh? Well, luckily for you, as I said, 20 odd years ago, I was in your position. How do I find out what the best people in the world are doing at this activity? So I had to find a way of meeting them. The best way to meet them was to say to a newspaper, I want to meet these people and give those people publicity. And that's how I did it. I wrote the book, Mind of a Trader, and that's how I met those billionaire traders. They taught me strategy. They mentored me. I then set up my own fund, because when people who are the best in the business teach you something, if you follow it, you can be as successful as they are. So that's what I'm sharing with you, because I've shared it for 20 odd years from the books and the newspaper columns. So that's what we're going to do. We're going to spy on the strategies of the best in the business. Now, if you want to be an athlete, you use the strategies of the best athletes. If you want to be an accountant, presumably you look at what the best accountants are doing. And that's all we're doing here. We're just copying what other people have done. All right. We're not reinventing the wheel. That's all we're doing. Also, within my own firm, one of the things that we learned over this period of time was we teach our staff and our trainees through practice with as little as $1,000 in their trading account. Okay, they don't need to have millions in it, because when you're learning, trading is a scalable skill. Write that down on that sheet of paper I told you to grab. On that sheet of paper I told you to grab, write down making money trading. Making money trading. The reason for that title is, in 3 months, when you look at that sheet of paper, if it says Alpesh's webinar, you're going to fall asleep. If it says making money trading, you won't. So right on that, trading is a scalable skill. It is scalable, which means if we can learn the skills to try and make 500 a month consistently, then we've got the skills to make 1,000. If we've got the skills to make 1,000, we can make 2. If we can make 2, we can make 4,000. It's a scalable skill, but we're not guaranteed. We are not guaranteed, asterisk that, we are not guaranteed 500 a month. You cannot just extract from the market a guaranteed sum of money. No trader in the history of the world has ever done that. Anybody who's honest will tell you that's not what you can do. Some months you'll have more. You save the excess for the months when you have less. So you iron out the ups and downs. That's the only way you'll ever get any kind of regular income. If you want a regular income, stay to the day job, I'm afraid. Okay, stay to the day job. But with trading, the idea is that we have a scalable business. It's an entrepreneurial venture. Write that down. That means it's the greatest business in the world because you can do it alongside your day job. I want to get you excited, not just about when do I buy, when do I sell, but about the whole 360 degrees. If I do not do that, if I do not get you excited about the whole project of trading, about the whole activity of it, and I just say to you, oh, when the Fibonacci does this, or the Elliott does this, or volume analysis does this, you're not going to follow it. You're going to fall asleep. You're going to get bored to death. All right. So that is why I'm giving you the broader picture here. Okay. We're also going to look through how brokers try and scam you. So we've got to make sure, we have absolutely got to make sure that we have mitigation strategy. In the Q&A section, we're going to go through that. We're going to go through how brokers rip you off, how brokers stop trying to match buyers and sellers like estate agents and instead became like casinos and started betting against you by widening spreads, changing margin rules midway, and all sorts of other tricks, moving the prices against you, hitting your targets. And how do we avoid that so that we can actually leverage them instead of fighting against them? Okay. Also, choice. How do we maximize our choice? In all things in life, the most important thing is to have a variety of choice. That is the secret to success, because if you've got enough choices, then you can make a decision which includes a quality decision. Okay, so it is far more important, and this is really important to people, and they don't get the importance of this. It is far more important to have a choice, and I'll show you the things we're looking at. Actually, in fact, I'll show you now. Okay, this is for private investors. So let me show you on the private investor side, a private investor platform, the choice of instruments we'd be looking at any given time. This is what we're looking at right now for you as private investors. Okay, the choice of instruments. Now, out of this, we might just pick one. We might pick, for instance, what's looking particularly good. You can see all the green arrows, Australian dollar, Swiss franc. I don't know, and I'm not an expert in Australian dollar, Swiss franc. What is more important is that I had within my armory the ability to choose to look at this, and I can see there was a downward trend. The red arrow, anytime I show you this, means downward move, and the green arrow means upward trend. So currently we're long Australian dollar, Swiss franc. Give me 1 second. We are long Australian dollar, Swiss franc. Yeah, okay. I had to check with my assistant because that trade's just come up during the course. I want to make sure that she's actually done that. Australian dollar, Swiss franc. Okay. The point is, I'm not an expert on the Australian economy and whether oil is impacting it and whatever else. What I am keen on is making sure I've got enough choice. So how do we ensure that we've got the choice to place those trades so that we don't have to be an expert? Now listen to me carefully. So we don't have to be an expert. Nobody's got the time to be an expert on foreign exchange, on Bitcoin, on cryptos, on indices, on gold, on Vodafone, on Whitbread, on Amazon, Facebook, all of those things. So instead, what we've got to do is be able to have a methodology which doesn't make us a slave to expertise, gives us enough choice so we can place the next thing, quality trades. So this webinar is going to be about how do we find those quality trades. They're far more important than quantity of trades, because if you do out of a big choice a few good quality trades, then naturally you're more likely to be successful. Now, everything I say to you should resonate to you just in terms of common sense and what the foundations of success in life are generally anyway, okay? Trading, as I said, is scalable. The beauty of this is we can start with baby steps. We are going to be, now listen to this really carefully as well and write this down. We are trying to be right a little bit more than a coin. A coin is right 50-50, heads or tails, okay? Up or down, right? We're just trying to be right a bit more than 50-50. Why, Alpesh? Why such low ambitions? Well, those are the ambitions that some of the world's leading traders have. Okay, so I'm going to tell you what the honest truth of what hedge funds and so on say. They don't say we're right 90% of the time. Anybody who tries to teach you some holy grail of how they're so right all the time, hitting the bottom of the market and top of the market, they're lying. But also think about this. Think about how unstressed I am that I don't have to try and be right all the time. Knowing that I've got a business plan which allows me to profit by just being right a little bit more than 50-50. Indeed, if I'm only right 50-50, it's fine, because the 50% I'm right, I'll show you through strategies that funds use and that you as private investors can use, allow you to make more money when you're right than you lose when you're wrong. So you don't have this stress of, oh my God, I got to trade wrong. I better not sell it because I'll have a loss. And therefore I better put more money in it in the hope that it'll turn around. And then you get fixated with the losing trade. You sink good money after bad. You have less trading capital. Okay, and you're less focused on your winning trades. Then you take your small profits from your winning trades to fund the habit of the losing trade, and the winning trade kept on going up, and you think, oh my God, why did I sell that one and not the other one? Has that happened to you? Put your hand up if it has. Well, my friend, you're not the only ones. Isn't that a relief? You're not the only ones. I've been through it. Everybody's been through it as they learn. So I'm going to teach you all the mistakes, psychological and otherwise, you're making, and I'm stealing everything from professional traders, amending it for you as private investors to be able to use, so that you can say at the end of this webinar, bloody hell, I'll never need to read another book, seminar, webinar ever again. Finally, like I said, you save the excess returns for the negative months. There will be negative months, okay? That's fine. We're going to do a business plan to show you how overall you're going to be positive anyway in a positive return. And the idea is you're supplementing your pre-existing job. I'm not telling anybody go leave a job and go, you're all going to be super successful. What I'm saying to people is, hey, diversify. Have the choice of, you've got your day job and we're just adding a bit more income. We're going to try and, our initial goals are to get to 500 to 1,000 a month consistently. Some months more, some months might be less. Okay, so that we can then scale up. And we'll worry about scaling up, which is a separate issue. How do we get more money and more capital at a different stage? At the moment, let's just solve the simple problem. Let's learn the skills of when to buy and sell. I'm going to be drawing on the know-how, not just of myself as 13 years as a hedge fund manager, but also some of the leading traders in the world who became my mentors, people like Bill Lipschutz, global head of foreign exchange at Salomon Brothers when I met him 20 odd years ago. Global head of foreign exchange at Salomon Brothers meant he is the biggest forex trader in the world. Okay, his chairman at that time was Warren Buffett. Now, for anybody doubting, well, how do we know who's your mentor? Well, it's in my book, okay, published by the Financial Times, right? Lessons in trading strategy from the world's leading traders. Don't buy the book. It's 20 years old. And I'm going to give you the best bits of it in this webinar, compressed in this webinar. Got it? Now, it wasn't just him. Other mentors who were in that book whose strategies I'm using who were so good that I went from being a student at university when I met them and wrote the book and learned about this to being a hedge fund manager. That's how good they were. Okay. You don't all want to be fund managers, but the point of it is that whether or not you want to be fund managers, at least you're going to have the know-how, so that even if you keep your day job and just earn a little bit extra with a smaller sum of capital, at least you're earning. At least you're earning. We are here to make money, which is what David Kite, one of the other people on there, said to me. John Najarian was one of my mentors through there. Bernard Opity runs $1 billion hedge fund as well, amongst a bunch of others. All of that compressed into this webinar. So one of the key points I wanted to get to you, like I said earlier on, working our way through that agenda. Let's work out the problems and then the solutions. Key problem, you're fighting news analysis or news releases or non-farm payrolls or this amount of news, that and a thing. I'm not saying it can't be done. All I'm saying is, why the hell are you making your life so difficult? You're not an investment bank with thousands of analysts. Okay, this was my reading list because I like reading geeky stuff. A couple of days ago, dollar edges up, US yields poke up 3%, strong pound, interest rate hikes. Okay, dollar turns negative, 10-year bond yields retreat below 3%. Do you really want me to bore the pants off you talking about the European Central Bank and bond yields? Okay, now I love it because and that's why I did a degree in economics. If you love all of this, go do a degree in economics. But trading has got nothing to do with all of this news because you're going to make your life too complicated, too difficult, and you'll only get it right now and again. Why every day would you go up against trying to outsmart the market? That's not what you're trying to do. Why not ride on the coattails of the market moves that are already there? Okay, so we're not going to be using news as a methodology, I'm afraid, because it's too much like gambling and it's too difficult for private investors. And that's the one thing I've learned from speaking to private investors for the last 20 years. Too complicated for them. They don't have the resources. Let's go through some of the other big lies or big problems, big mistakes you've been making. Okay, first thing, a weekend of tuition is not going to make you a proficient trader. There's all these academies, schools, institutes. Anybody who's got the name trading and then institute, academy, or school next to it, shoot them. All right, they charge you £5,000 for a weekend of tuition. They're not going to make you a trader. We're going to find an easier way. You know what the easier way is? In the comfort of your own home with an iPad or a cell phone or a laptop or a PC, you're going to practice with a small account. And I'm going to show you what you're going to practice. So you can do it when you want. You don't have to get into trains and hotels. You do it by the end of this webinar. All right, and you take as long as you want over it. Forget binary options. All right. I'm not saying all brokers who offer binary options are scamsters and fraudsters. All I'm saying is binary options is the same as going into a casino. The odds are so heavily stacked against you, you're screwed. Please ignore them. All right. Don't ever trade binary options. Right. Also, you're not going to learn to trade from CD-ROMs about trading videos. It's how it used to be done. Can't be done now. Lie number 4. You don't need a mentor or professional hedge fund manager teaching you. Look, I had one. I needed one. I'm going to be your mentor right now through this webinar. I think you need a professional regulated fund manager. You don't need teachers. Trading is a hands-on activity. You can't learn to drive by somebody describing it on an app. Oh, drive, go left, go right, drive like this, accelerator, clutch. You needed somebody who already knew how to drive. In the same way, trading is something you needed somebody who knew how to trade. The only people who know how to trade are those who are FCA regulated fund managers because they had to go out there and prove it to the rest of the world. Everyone who's a retired teacher, a former city worker, bullshit. All right, they obviously weren't good enough. If you want to risk your money with people who weren't good enough, that's up to you. But why would you want to take tuition from somebody who just isn't good enough? All right, it's up to you. I'd rather go with Harrods rather than Poundland and Lidl. Lie number 5, brokers can teach you to trade. No, they can't. There's a reason brokers can't teach you to trade. They're in the brokerage business. Okay, so when they hire somebody to give you analysis, who's their full-time in-house analyst, shoot yourself. Don't listen to those people. All right, they'll find ways of making you lose money. Lie number 6, you can learn to trade by watching somebody else in a trading room. There's a proliferation of apps where you or chat rooms where you're supposed to pay to sit there going, it's going up now, the FTSE, oh, now it's down, now we're going to put our stop here. No. And this notion that, oh, just because you're with a whole bunch of other ignorant people, suddenly the sum total of 100 ignorant people makes wisdom. It doesn't. A room full of people who don't know what they're doing aren't any wiser than a one person who does know what they're doing. All right. So these are the problems we're going to be solving in this. These are the pitfalls I wanted to identify to you because a lot of you don't even realize these are pitfalls that you're suffering from. And the reason you don't realize it is nobody's ever. Oh, by the way, I've got to draw this one to your attention because my assistants put a post-it on my desk. Sterling yen. Now, a lot of you know the webinar I did 2 days ago, we were short sterling yen. Okay. Well, here we go. This is sterling yen. We're back short again. Okay, on this. We didn't go short on this let me just put the map out there. Let me just draw the image. We didn't go short on this when the signal came. Now I'll tell you why. For a very simple reason, right? That's the short signal to go short. Now I'll show you the strategies, how we work out when to go short and so on. Because that came at about 1 in the bloody morning. Well, guess what? Whilst I was changing my son's nappies, I wasn't looking at the markets, and neither were any of my staff, because I don't pay them to work nights because they're expensive enough as they are. Instead, any good, decent strategy, like the one I'm going to show you in this webinar, should be robust enough that you don't have to be watching the screen. The price is there near the entry long enough so that when we got to the office 7, 8 in the morning, we saw the price is still near the entry price, so we could go short. And lo and behold, luckily for us, I say luckily because I didn't move the market, okay, it's collapsed. And so sterling yen at the moment, we're short on sterling. Now, there'll be all sorts of news items where you might think that's the case. Okay, why is the yen suddenly stronger? Is it because of North Korea and denuclearization? Is that why the yen's stronger? Why is sterling suddenly weaker? Because Amber Rudd's made it absolutely clear there's not going to be a customs union. All those are lovely little stories to fit the facts. But the fact of the matter is, I don't know or care. There's too much noise and news out there. What I care about and what I've got to do is I've got to look at this at 7 in the morning, see that I've got a short signal, place the trade, bang, sell at this. Here's my stop loss, right? This is when I'll exit and get the hell out of there. So I'm going to show you, how do we know which trades to do? How often do we do them? How much money to put in? Where do we put a stop loss? Bosh, 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 bosh. Do it and then do the day job or whatever else. The day job in my case is meeting sovereign wealth funds and pension funds to get more capital into our second and third follow-on, actually third and fourth follow-on funds, okay? And it's the same story with you. You've got better things to do. The reason you don't want to be stuck in front of the screen all day long is something Patel, the global head of foreign exchange, another mentor of mine, sorry, not the global head of foreign, the chairman of the Chicago Board of Trade when I met him 20 odd years ago, Patel said this to me. He said, when he's got young traders, he's training people like you, and these become millionaires, okay, that he's trained up on the floor of the Chicago Board of Trade, which is the largest exchange in the world. He said, what he'd say to them is, I only want you trading and on the floor for an hour. And if you've made profits, I want you to bugger off home. And they'd say, why? Because you'll have got an ego and you think you've got the hot hand and, oh, let me try my hand at this, this, and this. And he goes, and if you've made a loss, you're going to chase your tails and you're going to be angry. So for both reasons, profit or loss, I want you off after 1 hour. I was shocked. I thought he'd say to me what you're all thinking, which, oh, surely trading's about just hit the keyboard and magically money flows into your account. If it was that easy, we'd all be spanking the keyboard every second of the day. Instead, we don't. Because if it was that, then guess what? Making money would just be pressing a key and we'd all be billionaires. It isn't. Perversely, it's about how less time you spend, but how you find quality trades like this one. Anyway, at the moment, that's where we are on. I will come back to all of this, but that's that one I particularly want to draw to your attention because it was falling off the edge of a cliff. Just a bit like we've got long on Australian dollar, Swiss franc. Now, I'll explain to you why we picked the various trades we did and so on. But before I do that, so that's part of the solutions. Part of what I also want to do is say this. This is what the Union Bank of Switzerland, UBS, has said to its wealthiest clients this week. This is what it sent out to its wealthiest clients in the world. Okay, so a Swiss bank speaking to the richest people in the world. Okay, so if ever you wanted an insight, what do they tell them? And we as a hedge fund, we get this across our desk, this kind of information, because they all want our business. So they lure us with data and information, and we go, ooh, they're saying this and not this, or maybe I should give a bit of capital to them. You know, same old. Whether you're dealing with institutions or whether you're dealing with the local bank manager, it's all the same thing. Everybody wants your business, okay? And this is what they said to their clients. Right, this is what they like, all right, and this is what they don't like. Now, you could have a million questions. Why do they like this? When do I sell? When do I buy? How long do I hold for? How much capital should I put in? How do I use this? And that's my point. We're not here to deal in generalities. If you want to read all of this stuff, I can send it to you every single week. Every single day, actually, I get a nice little reading list because I'm a geek. But that doesn't tell me when to buy, when to sell. Okay, buying and selling is going to look, and by the way, feel free to take a screenshot of that if you wish, take a picture on the camera, go, right? What we like. That's what they were telling their wealthiest clients. And I'm sure it'll become a self-fulfilling prophecy and they'll get some things right and they'll get other things wrong. Okay, they don't like the US dollar. You might say, but everybody likes the US dollar. Well, these guys have got access to trillions of dollars. So when they tell people we don't like US dollar, I'm starting to think, oh God. Okay, now. So what is trading going to be for us? Well, listen, let's simplify. Let's cut all the crap. trading is, like I said, when to buy. So how do we know when to do that and when to sell? All right. And since you, me, and everybody else are going to look at the same things, whether it's euro, sterling, or oil, or Vodafone, and I'll show you Facebook in a second, and I'll show you Ripple and Bitcoin and Apple, FTSE as well, a DAX. I'll show you stocks, indices, all the rest of it. Given that we're all looking at the same stuff, and we're all making the same two decisions when to buy and sell, the only difference between us is the size of our trading capital. That's what we want to make the only difference between us. That trade I just showed you on there, trader 1 might only make £500, trader 4 might be a big bank who makes £1 billion. I don't know, but it's out of the same thing. So how come if they're making the money, how come 80% of private investors are not? How come banks, time and time again, their trading floors are making shed loads of money, and yet private investors, same data, same two decisions, are going, well, where's my share? Where's my share of the fat pie? Okay, only 20% of private investors make money, 80% losing money. So how do I get you in there? All right, so that's the key problem. And to entice you and get you excited, I've simplified it. We've got to work out when to buy, when to sell, and that's what we could be going from. Hey, maybe some of you will open up your own funds and your own banks. You'll be that successful. It's not unknown. All right. What are the trades I'm doing at the moment? These, don't write it down. I'll show you on screen. Let me just show you on screen what we're looking at and why we're looking at them. Now, what I suggest to all my apprentices, all the people, all right, several things I suggest. Whenever you're trading, I want you all to always have a free live real-time, free for life live real-time data platform, something like this, which gives you access to live real-time free prices. Now, you can do this nowadays. Before, 10 years ago, 20 years ago, I couldn't give them this webinar because I would have had to say to people, oh, buy this software, it'll cost you this much in subscription costs. I don't want you to pay for anything. So I want you to use things which give you free live real-time data in Forex, in US stocks, in UK stocks, in European stocks, in cryptocurrencies, if you wish, and so on and so forth. Okay, because that's the first step. The first platform is we need data and we don't want to pay for it. The second thing is we need to know what should we look at. Okay, like I said, I need to have ample choice, because if I've got choice, I've got more opportunities. If I've got choice, then I don't need to be in front of the computer screen all day long. Why? Well, think about it. If I was only looking at the Dow or oil or gold, I'd have to look at it all day long and nothing else, wouldn't I? Because that's the only thing I'm looking at. Whereas if I'm looking at, and I recommend 16 to 24 different products, what are they? I'll tell you them in a second. Okay, 16 to 24, which you scan and write this down. So I want you to write down the number 16. I want you to write down, well, 16 to 24. I want you to write down also that we're going to be scanning those for 15 minutes a day before and after work. So 15 to 30 minutes a day before and after work. And we're going to look for trends. How do we find those trends? That will come in the strategy section. Okay, what do I like to look at? Well, what I personally like to look at is on screen there. But in fact, I don't care as long as it trends. As long as it trends, I don't care. My personal favorites are the 1 hour time frame. So write that down. Why 1 hour time frame? Because the 1 hour time frame gives the optimal trend size. It's not so frequent to give signals that the trends are too small, and it's not so infrequent that I'm doing too few trades. On the 1 hour time frame, I get a good size trend about 1 to 3 days. So even if you've got a day job, the 1 hour time frame will give you a trend every 1 to 3 days. So even with a day job, you could be looking at these 16 screens, and I want you to do 1 trade a day. So write that down, and I'll prove to you mathematically in a business plan why 1 trade a day. So we scan through all of these and we look to see where is there a trend, or where do we have signals where the price is near the entry. Now, at the moment, we're short euro dollar, by the way. It's not based on any fundamentals, all right? Okay, and I'll explain to you what it is based on. The DAX is one of my most favorite because for some reason, the DAX tends to be a nice trender. Now, I want you to notice several things. Notice that whilst that position we're in at the moment has been nice and fat and profitable, and anybody who was on my webinar 2 days ago knows that we've been tracking the DAX. Notice here, we didn't go short at the top. We got short midway. That's what we do. We're not picking bottoms and tops, I'm afraid. We get in a little bit late. How do we do it? I'll come to that in the strategy section. And look at this. That was a losing trade. Okay, but that's fine. Losing trade, small profit, nothing to write on that. But the big one, that's what makes up for it. And that's real trading. You'll have some losses, you'll have some small profits, but we get the big winning ones, and that's job done.
Okay, that's job done, and that's what we're here for, and that's what we're looking for. Sterling yen, I've already mentioned. I won't go, I'll come back to cable because I've done a longer term chart for some of you on that because people are talking about Brexit and so on. Euro yen is over here. That's the euro yen trade if anybody's interested on euro yen. Australian dollar Swiss franc is over here. Now that's live. Okay, that's now. So we'll come back to that. That has just given us a buy signal. Okay, this is what I mean. We're scanning it for 15 minutes a day, and guess what? We just got a live on air buy signal. I anticipate this going up, not least because all our indicators, which I'll explain in a second, suggest it's got a strong likelihood of moving up. Why is the stop loss here? I will explain that. What is this red dotted line? And it is not a profits target because I would never want to cap profits. Write that down. Never cap profits. I'll explain that as well. How much money do we put into a trade? Well, that depends on how much we could lose, which depends on our stop loss. So how do we decide our stop loss? I'll come to that as well. Once you work all these things out, they come to you like second nature, and you should be making money like making sausages in a sausage factory. Okay, but that you can see on screen. We'll come back to this one later. Australian dollar Swiss franc. Okay, Australian dollar Swiss franc. And we'll come back to some more of these trades earlier. Now, how do I get the process of picking which to look at? That's first thing. Secondly, why do I not care that I'm looking at the Dow or gold or oil? Well, because money is money. I don't care what I make it in. Like the guy who has a market stall, he doesn't care if he makes his profits from selling oranges or sweaters. It doesn't matter as long as I'm making money. Well, if that's the case, then I need to have a process, a strategy which works across all products that I'm looking at. And what I'm saying to you is this is not about spread betting or CFDs or options or futures. Doesn't matter how you translate that trade as long as you are profiting. So some might prefer spread bets, others CFDs, others futures. That's up to you. That's not what this webinar is about. It is about finding when do I buy, when do I sell. Okay. And why, Alpesh, is it one trade a day, one quality trade a day, or collate them all onto Fridays, maybe, or Mondays, and do five on a week, 5 a week or 1 a day, same principles. Okay, how much capital did we put in? We'll come to that and all the other basic issues. But what this does is it simplifies, speedens up, and lets you get on with what you're best positioned to do. Okay, what is in your interests to do, rather than complicate matters. Okay, and why have we got these positions? Why did I come across these? Are you possibly saying, Alpesh, you're an expert on the European economy, the American economy, the Japanese economy, on equities like Facebook, the German economy, on tech stocks, on cryptocurrencies? Obviously not. Obviously not. So how is it that you came up with these particular trades? Well, we're going to come to how it is through our strategies we came up with these. Oh, by the way, Amazon. So let me just explain one thing that I love to do when I'm trading, and I've been doing this with tech stocks and with cryptocurrencies. With both of them, I've got long-term holdings. So Amazon I've got for the long term, Google for the long term, Facebook for the long term. All right, because I believe these companies, for whatever reason, you might think I'm stupid, are a proxy for the American economy, and I think they're going to make lots of money for the future. So I look to go short whenever I can, knowing that I've got a long-term holding. So in the short term, if I can sell when they fall, then I'll make some profits, which will pay for my long-term holding, and my long-term holding becomes effectively free. Okay, so let's take the example of Amazon, which in the webinar a couple of days ago, some of you will remember, I was short on Amazon. Okay, I said to you on that webinar, I'm short on, whoops, where we gone? I've got to try and draw. Why can I not draw that? Here we go. I've got to try and draw that. Okay, we're short on Amazon. We got the exit over here. We got the long signal. I didn't need to take the long signal because I'm already long on Amazon on my long-term holding. Okay, so I'm not going to double up on it. So this is where things are at the moment with Amazon. That short trade from a couple of days ago has exited, as you can see there. Okay, so that's Amazon. The same principle applies to currencies like Ripple. All right, Ripple is currently a long. So we're not taking the long trade because I've already got a long-term holding on it. If you want me to talk cryptocurrencies more, I will go in depth in the Q&A section, similarly with Bitcoin, and that it's been long recently. Okay, so we've got the trend. So we started applying this, and I mentioned it on my appearances on the BBC, that the same processes we've been using for foreign exchange, oil, indices, seem to be working with cryptocurrencies, finding those trends and getting into them. Okay. As well. All right. So Now, one thing that I'm going to do, so we've identified some of the problems. Let's look at the solutions. Let's look at those answers that I've touched upon in more detail. When do we trade? How do we find the trend? How do we know when to get in? Let's work on those, or put another way, let's look at, there's going to be a poll I'm going to put on the over there. Okay. If I promise to give you, and one thing I want to ask your permission for is this: if I give you great content, can I have your permission right at the end of this webinar to tell you about a technology my hedge funds created, what we think is the Google of trading? Google is an algorithm which searches the internet for information. Well, we've created an algorithm which searches the markets for information. Okay, so can I do that right at the end? That's what I'm going to say. All right. Okay. Now, somebody just said, can we have your last screen, please? The last screen, was it that one or this one? Don't worry, I'll go through anything that you want later on. There's still so much to do. We've got an hour to go yet, or 45 minutes to go yet. Okay. So the questions are, how do we find these things? How do we know when to buy and sell? All right. Okay. So let's go through some of those now. Right. Also, watch to the end. I'm going to make sure everybody gets access to a digital folder, an online digital course with PDFs, infograms, videos by me on trading. So anything that I've touched upon that you want to know more about, that's in there. So you might say, oh, Alpesh, tell me a bit more about those stop losses that you're going to cover and money management. Don't worry. Whilst it's in this webinar, I'll give you access for those watching the webinar to the end, the books and everything else. Okay, as well. Louis, in terms of the list, it's actually these, and I'll go through them again. For instance, we're short on the short position on euro yen, or Australian dollar, New Zealand dollar is long. See that green arrow? That means we're long and the market's still long. So if you want to know what the trades are, they're these ones on screen, and I'll go through any of them as well. Australian dollar, Swiss franc, we're in long on that, and it's in profit a little bit already. But we'll keep looking at that because you've seen that one come up on live on air, as it were. So we'll go through it. Okay, so don't worry about that. The way we're going to treat trading in this webinar is this: we're treating it as a strategy. Trading is a bit like poker. Okay, if you do it wrong, it's gambling. If you don't, and that's why poker players join hedge funds, if you don't, it becomes strategic and it gives you an edge. Nobody in poker wins every time, every hand, even if they're the best in the world, and trading is the same. Okay, you're just trying to find a slight edge, slightly the odds in your favor, and that's all we're doing here. That's all we're doing here. In other words, what we're trying to do in trading is, if the price is at 100 and could go to 120, or a stop loss at 80, so if we did 100 trades and 50 did indeed go up 20 and made us 1,000 in profits, and 50 went down and made us 1,000 in losses, our net return will be zero. We're trying to go from 50-50 like a coin to 60-40, which gives us a net positive return. So 50-50 in profits, 50-50 like a coin to a net positive return by just slightly the odds in our favor. Not trying to be right all the time, a little bit more than most. So how are we going to do that? Well, the other thing we're going to be doing is this, and what all top traders do. If you said to top traders, out of your 100 trades, what does your performance look like? They'd say, we had no big losses. So we're going to make sure when we solve this trading problem, we have a process and a strategy where we have no big losses. How are we going to do that? Okay, we're going to need to know where to put a stop loss and how small a size to trade with. We must never have big losses. If in my hedge fund I had big losses, even one big losing trade in a month, all my investors would pull their money because they'd say, you haven't got systems in place to protect our capital. Okay, they'd say you're an amateur. Forget it, right? Similarly, we'll have a whole bunch of small losses. What? You brought us here to tell us about small losses? Well, yeah, I wish every trade was a big winning trade. I wish every trade was winning and large. But that's not how life works. Anybody who promises you that is lying. They've got a crystal ball or a time machine. Okay, they're either lying, crystal ball, or time machine. You pick which one it is. But in reality, every trade we enter, we hope it's going to be a big win. But in actual fact, often doesn't end up that way. Ends up maybe at a small loss or a small win, because that's how most markets end up. And occasionally, 15% of our trades, 15 to 20% will be big wins. There'll be trends which keep on going up and up. We double down on those positions and we make even more. Okay, how do we know when to double down and so on? I'll come to that. What I wanted to show you here is this is the outcome of what every successful billionaire fund manager in the world has ever produced. And yours has got to be like that. The only difference between you and them should be the amount of capital that you have got. Okay. We will try and use edges when we can. Edges like this. This is data from a major US broker, which looked at the percentage of losing and winning trades by every major currency pair. And what they found is that their clients were 71% winning on trades to do with Australian dollar, New Zealand dollar, but were more likely to lose on trades with Australian dollar, Japanese yen. Percentage of winning versus losing trades, the best ones were sterling yen. Well, I showed you sterling yen a moment ago. I don't know why that's the case, but it seems to trend a lot better and a lot easier. I'm not saying that I'm only going to trade these sort of more likely to win trades or whatever. All I'm saying is if we get information like this, I'll share it with you and we'll try and focus on those trades. But in actual fact, I want you to be in a position where you have choice. You pick one trade a day. How do we do that? I'll work that out, because what you guys have said to me is your biggest trading problems, which we're now going to do in the problem solving stage of this webinar, are how do you stop losses? So the next slide is going to show you how to do that. Knowing when to trade, when to enter a trade. I'm going to show you how to do that in the strategy part of this webinar. Knowing when to take profits. I'll explain that based on whether you've got a day job, so you're not in front of the screen, or if you are in front of the screen, because there's two different approaches. Next in the webinar, handling emotions. Well, if we've got a business plan and a process, we don't need to be indecisive. We don't need to be stressed. Our emotions are handled. Okay, if we're not trading too large because we know exactly how much money to put in, where we might get out, then the more automated it becomes, the fewer emotions we have. Having a trading business plan. I tell you what, I'll give you one in this webinar. I'll give you a trading business plan, okay, and a process and the strategy which removes all these problems. So given that you've got these problems and I'm promising to remove them, get on with it, Alpesh. Here we go. First slide on the problem solving bit. How are we going to solve all the problems you've got? This is how we're going to do it, which is what I think is the best way private investors should use. All trading can come down to ABC. ABC. Like I said, I want to always simplify things. A is the point at which we enter a trade. Well, how do we know when to enter? The very next slide is about the strategies we're going to use to enter a trade, how we know when to enter. Okay, so that's the next slide. So assume for the moment we know when to enter, because that's coming up next, right? That's point A. So point B is the stop loss. B is the stop loss. Now, let's deal with that first. How do we know where to put a stop loss? Probably the most important thing, even more important than when to enter, is how to make sure we don't have too many big losses. So what I learned from people like Bill Lipschutz, global head of foreign exchange at Salomon Brothers, these big fund managers, is all of them use the same methodology for stop losses. And that methodology could be used by private investors, but private investors never knew this because they'd never spoken to hedge fund managers. They were too busy speaking to Greg Secker, who's not a hedge fund manager, or any of these people who, they're not fund managers, they're not regulated, and they haven't got a freaking clue, in my opinion, what the hell they're doing. Okay, so let me tell you, all the professional traders in my book and so on, they all did two things with stop losses. One, they had what's called volatility-based stop losses. In other words, every single trade, the stop loss was based on the volatility of the market. The more volatile the market, the further away the stop loss. This might sound complicated. Bear with me, because this is the difference between success and failure, and it will be simplified. Just like driving is complicated when you first do it, but in actual fact, once you get used to it, it isn't. It's easy, it's simple, it's brilliant. So volatility-based stop losses. What does that mean? Well, volatility is how much the market's moving up and down in any given period. Well, you're not going to sit there with a magnifying glass and measure that. What you might say is, well, that's noise. That's how much market's volatile or noise. Therefore, I'll put the stop loss at 2 or 3 times further away than the average noise, because then I know that noise won't hit my stop loss, but instead the market must have changed direction. So you don't want it too far away. You don't want it too close. Some people might use something like 2 times average true range or 3 times average true range, ATR. Write down ATR, look it up in your own time, because I don't need to teach you things which are freely available on the internet. Or they might use 3 times ATR. Other people might use their experience, okay? And some people say, well, is it 2? Is it 2.5? Is it 2.75, 6, 7, 8, 9, all 3? It's the principle. Volatility-based stop losses. The beauty of that is you don't get stopped out by noise, and every stop loss is perfected to its own market, okay, and market conditions. Brilliant. But that's secret number 1 of all hedge fund managers, not to get stopped out by market noise. Secret number 2, because you're going to say to me, wait a minute, that means if the stop loss is further away, you could have a bigger loss. No, because secret number 2 is volatility-based position sizing. Write that down. What is volatility-based position sizing? It means that if the stop loss is twice as far, so let's say it's not 20 points away, but 40 points away because the market's twice as volatile, your position size will be half as much. So you're not losing more money. Why is that ingenious? Well, first of all, it means you're not taking more risk in more volatile markets. It also means that just because the market's more volatile, you're not risking more, losing more, and more importantly, in volatile markets, dangerous markets, you're not losing more. Guess what most private investors do? In more volatile markets, they keep the position size the same and they end up losing more. And because it's more volatile and more noisy, they're even more likely to get their stop loss hit. So they make two things worse for them. They make it more likely their stop loss gets hit, and they're trading the same big size, which means they're more likely to get hit big and sooner. So they lose their money even more quickly. And then they go, oh yeah, market's volatile. That's why. So what if it's bloody volatile? It's always going to be volatile. You should have eased back. It's like flying a plane. I have a pilot's license. I know that when it's bloody turbulent weather, you don't go faster into it. You climb or you deviate away from it and you ease back on the throttle a bit, okay, in crazy volatile weather. Anyway, it's the same thing with trading. So that being the case, volatility-based stop loss, volatility-based position sizing, that's fine, Alpesh. But what's this C? Okay, so the next secret was successful trading, and all the richest traders in the world. I'm only telling you what the richest traders in the world taught me, and then I copied and used. The mirror reflection of point A to B is point A to C. So we know at entry where our stop loss is, because we use that based on volatility-based stop loss, based on, say, 2 times the average true range or whatever. We know, or used our eyesight or experience, or we said, oh, we'll put the stop loss near a recent low. Doesn't matter what. Whatever that is, the mirror reflection on the upside, point C, we must know as well. That's the point at which we say to our broker as well, don't just buy at point A, but also if the price goes to C, buy some more, double down. Why? Well, because if the price goes from A to C, as it did, you've got some profits. Why not risk those profits to make even more money on the basis that the trend, having already got to point C, is likely to continue? Okay. In other words, we don't have a profit target. We don't have a reward risk ratio, because that means capping profits. We add to our profitable positions. Why? Well, some of the most successful, richest people in the world will tell you, when you're doing something right, you continue doing it. You don't stop and focus on what you're doing wrong and making losses on. All right. But also, put another way, Paul Tudor Jones, billionaire hedge fund manager, put it this way: winners add to winners, losers add to losers. Never add to a losing trade, always add to a winning trade. But that has another ingenious piece of truth behind it. You know what it is? It is this. When you're starting out, knowing that you're going to add to your winning positions, you can start with a very small position. Just in case it goes wrong and hits your stop loss, you'll only have lost a small amount of money. But if it goes up and hits you, goes to your add profit level, or what we have it all written out for us up here. All this writing tells us all of this. Okay. You know you're going to be doubling down, so you know you can afford to start small initially, because you're always going to make more money as the profits go in your position anyway later on. Brilliant. Fantastic. Okay, so what did that do? It allowed us to start small, mitigate risk. Now, 2 more things. Whatever the rules were, we'll come to that in a second, for getting us in, which told us there's price momentum, there's likely to be a move up. Okay, likely, not a certainty, likely to be a move up. If you're sitting in front of the screen, then you can exit this trade when those rules no longer apply. We'll work out what those rules are in a second, don't worry. And if you're not in front of the screen, just make B, this, a trailing stop loss to exit automatically. If you don't know what trailing stop losses are, we can discuss it in the Q&A. Most brokers will explain it to you. You can place a trade on your phone, as simple as that, okay? Now, we'll run through all of that I've just explained to you as we progress. However, we need to now know, how do we know when to enter a trade? How do we know where point A is? For this, I'm using the same things that Bill Lipschutz and the other leading traders taught me. So you don't have to trust me for my methodology. It's not as if this guy with a weird facial hair off the internet has just taught me something. Should I trust him? Winton Capital used this slide. They're a multi-billion-dollar hedge fund. Man Group are also what's called momentum trading, trend following hedge fund. They use the same methodology, the same principles we're going to use as they use, which is this. They wait for a trend to start, and then they buy after some degree of lag. They don't try and pick the bottom because they don't know where that's going to be, or the top. Lag. Now you might say, lag? No, wait a minute. That's lagging. Why would I want to have a lag? I want to get in right at the top and right at the bottom. Well, if a $35 billion hedge fund is doing very well, thank you very much, using a methodology like trend following, why aren't you? Stop being greedy. Stop being greedy. Copy some of the best and the biggest. We'll just get back. We'll get into a trade off the back of their coattails. So once a trend has started, there's a bit of a lag. Now, how do we find that? Because this image looks nice and simple, but whilst that image looks nice and gorgeous and simple, that doesn't really help us. Where are we? doesn't really help us when we're looking at, I don't know, let's say Australian dollar, Swiss franc, I said earlier on. How do we know that was the point to enter? Why not a little bit earlier? Why not a little bit later? How do we know the odds are in our favor? What is it that the market is doing that we got our programmed computers looking for to help us do that? I'll show you that in a second. After all trading is simply this. The market can either go up and up, and we've got to decide what to do. Well, I said we're going to add to our winners, or it might go in our direction, then fall back, in which case we're going to exit because it means our trade hasn't come about. I know that's shocking to you. Most people just hold on without strategy. Or it could immediately go down, in which case we'll exit. Whereas most private investors say, no, I'll hold on in case it goes back up, even though I haven't got a strategy and that's not what I intended to happen. Okay. Or it can just go down and down, right? And here, again, if it goes down a bit, we'll just exit. Whereas most private investors will hold on and they'll dig themselves a bigger hole. Put another way, all trading can be summed up by this diagram. Every single trade you will ever do in your entire life. What we've got to work out is, when do we enter? Okay. When do we exit? Either at a profit or a loss. That's all it is. That's all it is. Given that I've simplified it so much, the question you're all asking, which is the final 30 minutes of the webinar, is how do we know when to enter then, Alpesh? What's going to simplify it for us? And how much can we make? Those are the two questions, the business plan and the strategy. So let's do those, the business plan and the strategy. The strategy is going to be based on very simple principle. We are going to ride the coattails. It's called momentum trading, trend following, call it what you want. We're going to ride the coattails. Somebody else is going to move the market. This guy with the black hat, that's Goldman Sachs or whoever else. They move the market. It starts trending. Only then do we get in. Why should we even think about trend following? Well, these are some of the largest, most successful people who do it. Okay. My favorite's a Man Group because they run AHL, $68 billion in assets under management. David Harding behind Winton. And also behind AHL, $690 million. All right. I also like Paul Tudor Jones, $3.3 billion from zero as a trend following hedge fund manager. Why Paul Tudor Jones? He's the one who said winners add to winners, losers add to losers. A few of these strategies that I've taught you, they're all the ones used by these guys. They just have more capital. They're just better at marketing themselves than you are. Okay. But the principles are the same. My job is to make sure now in this part of the webinar, you do two things. You follow the principles. So you know how much when to enter and how much to put into a trade, and let's look at the business plan. So let's look at the business plan, then the strategy. The business plan, and that's my mum, by the way, always makes an appearance. The business plan we're going to do first. It's not just an FX trader's business plan. We're going to do the business plan first. This is the same business plan because you've got to know whether or not trading is for you. That Bill Lipschutz gave me, and I've amended it slightly. So the global head of foreign exchange said to me, let's work out a business plan. Because I was at university and I said to him, Bill, should I trade or not? And he said, well, we better do a plan to work out whether it's worth it or not for you. So we're going to do that first for you. Get your pen and paper ready, please. And then we're going to do the strategy of how we know when to enter. So on the business plan part, the first thing he said is you've got to set your risk capital. Now, there's a picture of me driving for a very simple reason. I'm going to use the driving analogy because through analogies and metaphors, people can understand complicated ideas. Trading is like driving. It is like driving because when you get into a car for the first time, you think, I'm never going to learn to drive. I've got a wing mirror, I've got clutch, brake, accelerator, and you think, I'm never going to be able to learn this. But we all manage it. Trading is the same. So he said to me, what we're going to do is, and once you get used to it, you know, you can look at a screen like this. You've got your instruments up there. You have a look and you say to yourself, right, okay, Facebook shot through the roof. We were short on Facebook. And then we got a buy signal. We're already long, so I didn't take this short-term signal because I already had a long holding and I didn't want to be overly concentrated. Or whatever it is, okay? We're looking to buy. And notice how we got the early warning. We got the warning well before it actually moved up. Why? Well, because the price was doing something. What was it doing, Alpesh? I'll come to that in the strategy section. My point is, through this business plan, we need to first know how much could we make in trading. So the first thing he said is you work out your risk capital. What is your risk capital? Well, it's not the money you have today. A business plan is about how much you intend to get your hands on if you're successful. Okay, it's how much is this journey going to take you on? Okay, how much are you going to gradually make in trading? So Bill said to me when I was at university, and remember he was global head of Forex at Salmon Brothers. I was interviewing him for my book, became a friend and mentor as a result. He said, what we're going to do with whatever capital you have is we're going to set a maximum loss of 1% of your total capital. Now, a lot of people read this and they say, oh yeah, I've heard about this 1% rule. Anybody who's told you that 1% rule is an idiot. What? But Alpesh, you just told it. No. They've read my book from 20 years ago. Okay. in which I say this, and they've plagiarized it and they've taught you. 1% is what hedge fund managers use of their total capital, the risk they do on any one trade. They risk losing if their stop loss gets hit on any one trade, 1% of their total capital. That's what hedge funds do. As a private investor, yours should be a lot less. The reason we're using it in this business plan is this is where we intend to get to, not where we are today, where we intend to get to. So Bill said, set it at 1%. Equally, today, we don't have £20,000. When I was starting at university, when I was talking to Bill, I didn't have £20,000 risk capital. I wasn't born with a silver spoon in my mouth. So he said, but it's where I intend to get to. If I'm good at trading, I'll get my hands on 20,000 from friends, family, beg, borrow, or steal, get my hands on the 20,000. But this is a business plan to decide today whether it's worth doing this activity for the next year or so. All right, so let's say we've got total capital of £20,000. Therefore, the maximum loss per trade would be 1% of £20,000 would be £200, obviously. Assume for the moment, and it's not relevant, but assume you win 70 out of 100 trades and you lose 30 out of 100. I'll show you why that's not relevant, but let's assume that for a second, okay? Your average loss is therefore £200 or 1% of 20,000. Now, we're going to pick a strategy where we make more money when we win than we lose. In other words, winners add to winners. So we want to make more when we win than we lose, because we're going to pick a strategy like that. If we don't have that as a strategy, we're not going to use that strategy. So let's say we make an average win of £300, an average loss of £200. Okay. Now let's say we did 100 trades. So Bill walked me through this. All right. Well, 70 of those, according to these assumptions, they're big assumptions. Don't worry about them. 70 of those are going to be profitable times £300, profits of £21,000. And 30 of those are going to be loss-making, losses of £6,000. So he said, well, that's net profits of £15,000 per 100 trades. I said, Bill, oh my God, tell my parents I want to leave university now. I want to drop out of Oxford. I want to go and be a full-time trader. I want to do a Bill Gates. I just want to leave university. I've never seen £15,000 at university. I hadn't. From 100 trades, I said, all I have to do now is sit in front of my computer all day, eat nachos in my underpants, tap the keyboard, and I'll make £15,000 per 100 trades. And Bill said to me, slapped me and said, calm down, son, calm down. I said, no, Bill, just look at the maths. The maths is incredible. All I've got to do is find a strategy which allows me to do 100 trades a day. I'll call myself a day trader, or 100 trades a week. Ooh, I'll be a day trader. Woo. Okay. Or I'll keep my day job. I'll lie to my parents, tell them I'm going to become a lawyer, and because Indian parents love that, and I'll be a day jobber, in other words. I'll do 100 trades in a month. And he said, yeah, still calm down. And I said, no, Bill, let's do the maths. So there I was, all excited like crazy, doing the maths. And these were the figures I came up with. I said, 100 trades a week. I'll just do them in a week, Bill. Don't worry, I'll do 100 trades in a week. Okay, 50 weeks in a year, because 2 weeks of the year I'll be tossing around in my Lamborghini, won't I? I don't have a Lamborghini, by the way. All right, because I'm not an idiot. Right, so that's 100 trades times 50 weeks in there. That's 5,000 trades per annum at £15,000 profit per 100 trades. That's £750,000 a year, Bill. That's what I said to him. Okay, that's nuts. Hang on, right? What you're all saying and what you should be saying is, Alpesh, don't be stupid. We're not going to make 90% of that. Alpesh, we're not going to do 3/4 of that. We're not going to do 2/3 or a half of that, or even a third or a quarter or a fifth of that. We're not going to do 15% of that. Let's assume on this business plan, we decimated it as being overly optimistic and we only did 10% of that. That's still too optimistic. 10% of that is £75,000 a year. £75,000 a year is way more than what I said we're aiming for. We're aiming for 1K, okay, per month. That was our target, 500 to 1,000 a month. Okay, 1K per month. So even 10% of this business plan is too optimistic. So let's tone it down some more over this over-optimistic business plan. Let's say we keep our day job. All of you, keep your day jobs, please. All right, even if you're retired, keep your retirement. Let's say you did 100 trades in 6 months instead. By the way, you know what 100 trades per 6 months is? 1 trade a day or 5 a week. What did I tell you? I don't want you doing more than that. I want you doing 1 trade a day or 5 a week. Do you think you can find 1 trade out of all of these in a day? Okay, 15 minutes before and after work. I know you want to do more. Fine if you really want, but what I'm saying is you don't need to. Okay, you don't need to. All right, 1 trade a day. You think you can find it? Of course we can. Of course we will. All right. So let's say we did that. That's 200 trades per annum. Well, that's £30,000 per annum. Hang on. That's still, even though that's not 10%, it's about 4% of our business plan. That's almost 3 times more than the 1,000 a month, which we're targeting. So we took a business plan, we decimated it, we halved it,
And then we halved it again. And only then, when we were doing about 2% of our business plan, will be hitting our target. That's a good business plan. We can be 98% wrong on it, and it's still worth doing, because our target is 1,000 a month. Now, if we can do 1,000, we can do 2. If we can do 2, we can do 4. So the point with this was, is it worth doing? Yes, if we can hit some of these figures. But the question you should all be asking yourself, which is exactly the question I asked Bill, was, hang on, if all of this is correct, my friend, if what you're telling me is all right, then how come everybody isn't rich? Then how come everybody isn't rich? Okay, and he said there's 3 reasons for that. 3 reasons for failure: bad teachers, bad mentors, assume that's pretty much the same thing, bad strategies, which leads me on to the best bit of the webinar, the last bit, which is the strategy. How do we know when to enter? Okay, so we can get these figures, so we can earn some of this capital. Remember what we're trying to do, and that's my mum again, like I said, always makes an honorable appearance in the webinars. 100 trades per 6 months, 200 trades per annum. It's not £30,000 per annum. It's not what we're going for. We're targeting 1,000 per month. So we've got ample room for error. 1K per month is what we're targeting extra. So Bill said to me, so I said to Bill, give me a strategy to do this. He said, look, you're a poor little student, so there's no point me saying to you, go out and buy this piece of software, that piece of software, Bloomberg terminals, because you haven't got the money for it. So he said, let's amend what we do as institutional traders, one of the strategies we use, that you can use as a private investor. Okay, I said, well, that's fair enough. Okay, I can't go out and just buy very expensive pieces of software. I don't have that kind of money. Okay, so I said, well, how do I do it? Because remember, what we're trying to do is we're trying to use strategies which New Zealand dollar, Canadian dollar, right? That's a short trade, which tells us the market's going to trend. We didn't get in at the top of it, but we're going short. It tells us it's going to fall. Not as a certainty, but putting the odds in our favor. So we've got a slight edge, 60-40 in our favor. And if you're better than me and more proficient, I'll show you one lady who used to work for me who is and now manages $1 billion at Newton Investment Management. That's great. It's like I give you a tennis racket, teaching you tennis. You're a better player than me, even better. Okay, that's fine, right? Now, so Bill said to me, what we're going to use is this. We're going to look for that momentum. When is a trend starting? And he said, the best way for you to do that, Alpesh, is use some of the techniques of institutions. And what we're going to do is we're going to measure how close to the high the price closes in any given period. Okay. And I said, well, what does that mean? I've got to sit there with a magnifying glass. And why are we doing that anyway? He said, well, that gives us an indication of momentum. If the price closes near the high, it suggests a bit like those TV auctions. I've got 50. Anybody give me 60? I've got 60. Anybody give me 70? I've got 70. Anybody give me 80? I've got 80. It means there's buying pressure and there's a greater likelihood, not a certainty, but an increased probability that in the next period and the period after, the price is going to continue higher. Not a certainty. So how do we measure that? I said, how am I going to measure that? I said, I can't sit there with a magnifying glass, okay, measuring that. And he said, no, you don't have to sit there with a magnifying glass measuring. He said, for you as a private investor who wants free software, doesn't have lots of money to buy complicated algorithms, supercomputers, the best way for you to do it is to do the same principles all proper funds do. One, there's many ways of measuring this. No one indicator, no one methodology always works all the time. So we'll use multiple indicators. Okay. So secret number 1, we'll use multiple indicators. So I said, what are they? 1 second. And I said, well, if they're multiple indicators and you don't have to pay any special money for them, surely everybody doing it is no. He goes, we'll use it in a way the textbooks don't. Okay. Because in the textbooks, they get it wrong anyway, because they don't really understand what real traders are doing. So multiple indicators, not in the way textbooks use. I said, fine, tell me what they are. He said, I will in a second. Secondly, we'll look at different timeframes. Is there a trend in multiple timeframes? So we need to look at these multiple indicators suggesting a price up in multiple timeframes, because if in different trading timeframes, all the money is going to push the market higher, let's say, then the probability of a move in the time frame you're looking at is higher, and the size of the move is higher in the time frame you're looking at. That's why we look at multiple adjacent time frames as well. I said, fine. And I said, what's the third secret? And this was the most important one, which is PC. And I'll come to what PC is in a second. So I said, right, let's go to those indicators. Which ones are we going to look at? And why are we looking at multiple indicators again? He said, because no one indicator measuring whether the price is closing near the high works all the time. So we're going to use it like a filtration process, a triple filter, a bit like when you clean water and you have a water filter, it goes through different layers. Okay. With triple filter to make sure we get all the bad trades out, all the dirt. So what we're going to do is we look at multiple indicators. For instance, all of them which measure is the price trending or likely to trend. Not any one of them works all the time, and some are lagging and some are early. That's why we look to see, are all of them
suggesting, or the majority of them suggesting a trend. So for instance, the MACD, the stochastic, and so on. And you may have noticed earlier on, for instance, here, you might have seen this where it says MA, MACD, MACD2, and so on. What that is just looking at those multiple momentum indicators in different time frames, but not in the way textbooks do. So we look to see, to avoid us being too lagging or too early, we look to see, are those indicators in different time frames flat to rising? Because that suggests there's an increased probability of a sizable move, a trend, and a sizable trend in our favor. Because since no one process works, we multiple filter through all of them, and only when they're all in congruence do we find a suggestion. But that's not all. Multiple indicators, not the way the textbooks do, across multiple time frames. Remember, I said there was a third rule. Okay, the third rule, PC, is price confirmation. What does that mean? That means we need also to see the price. Has that moved up in our favor? Has it made a 2-period high? We found through a lot of analysis that the 2-period high was the best thing. So multiple indicators across multiple time frames, 2-period high. And we then programmed all of that, because we used to do that manually, and you can still do it manually if you wish. We then programmed all of that into one single indicator to tell us, for instance, like this with the Australian dollar, New Zealand dollar, multiple indicators, multiple time frames, factor rising, and price confirmation. Right, we can afford to get in. We can afford to buy because there's an increased probability that the price is going to move up. Euro dollar, for that matter, short. It's been short for a while. Again, if you saw the webinar I gave a couple of days ago, you know we were short on this. We got another short signal there, still short on it. Because what we did is we programmed it to scan all of this information on every time frame, on every currency pair, even though the 1 hour time frame is best, and I'll show you why in a second. Okay, I then took this strategy, because obviously, how do we know this works anyway? We then took this strategy and I applied it competitions in newspapers. I developed this strategy with Bill Lipschutz 20 years ago when I was at university. That's me. Red carnation means last exam. Perfected the strategy, won awards, including awards in the Financial Times. That's me on the front cover of the business section of the Financial Times, and it says Patel is top FTSE 100 forecaster. When I won that competition using the strategy, the publishers, Financial Times, said to me, "Do you want to write books about this? You're really good." And I said, "Yes, because it'll raise my profile." You don't write books to make money. You always write books to raise your profile, whether you're Michael Bloomberg or George Soros or whoever. Okay. And you want to raise your profile for a reason. You want to get into politics. You want to be the mayor of New York or whatever else. For me, it wasn't politics. It was so I could set up a hedge fund. And then they said, "Well, do you want to write a weekly diary of your trading?" I said, "Yeah." So we called it the Diary of an Internet Trader. I did 200 odd columns there and used that profile then to set up the hedge fund. When I set up the hedge fund, I had to give up the writing because it was a conflict of interest, self-promotion, right? That's me in my first ever offices. People like Merrill Lynch, HSBC licensed my strategy and the strategic tools. And in the end, American Express, Goldman Sachs, paid me over $1 million, which is what it cost to set up the hedge fund, because you've got to pay custodians, lawyers, banks. You've got to set up your UK FCA regulated entity. You've got to pay lawyers extortionate fees. Anyway, that's what it was. Multiple indicators, multiple timeframes, price confirmation. I'll show you how to download it if you wish. But if you want to do it manually, you can. That's what led to fame and fortune for me. That's what led to me being on BBC, Sky News. I'm sure you've seen me on CNBC and all the rest of it, because they keep calling me back forecasting the markets. And I tell them, okay, so even if, like, you're saying it's great, because this is great when you're running a fund, because you've got a global audience of 300 odd million on the BBC. They're not tuning in to watch me. They just happen to be watching and I turn up. The point is, even if I'm talking about Trump's tariffs, I will look at what my indicator is saying and I'll say, right, I think the dollar's going to fall. I think sterling's going to rise. I think oil's going to rise. This is how it's trending. That's what I'll do. There's a reason they keep getting you on for 20 odd years. And the reason is you're calling it right. You are willing publicly. You believe in what you're doing so much. You know how accurate it is that you'll put your neck on the block, okay, on global television and stake your reputation on it. I believe people who use trading indicators, which is what this is, that's the way all trading is going to go. Okay, where we collate multiple indicators, multiple timeframes, factor rising, 2-period high, and it scans the markets all the time, tells us we can pick one quality trade a day because we're looking at the markets, and within 15 minutes, one of those 16 positions will issue a signal. If you're not using an indicator, this is what trading's like. You might make enough to get fat. This kid's a little bit chubby. I'm one to talk, right? But it's going to be hard work and you'll never be able to scale up.
With an indicator, what it allowed us to do, it automated. You know, we live in an age not where we delegate anymore, we automate. It used to be in the old days, you did it all yourself. Then people say, oh, delegate, there's cheap labor. Now they say automate. And this is what it is. With an indicator, you've got machinery, which gives you more and more trades. So we gave people the indicator aspect way of doing it. And what we found is before an indicator and after, so after in orange, the warm glow of orange, and before an indicator blue, okay, confidence in strategy went up because they knew there was a strategy behind it. They had lower stress over losses because they knew if there's a loss, it's fine. It's part of a bigger sausage profit-making factory. There's a business plan for long-term profits. They had clarity of exits, clarity of entries, clarity of stop losses, things that are essential for trading success, peace of mind, handling emotions. Okay, all of these things were critical. Now, I said to you earlier on, I said, look, can I give you great content? Can I tell you about the technology we created? So what we did, so I'm going to tell you about technology. I said to my hedge fund guys, I said, listen, let's steal an idea from 3 billionaires. Let's steal an idea from billionaire number 1, Lord Alan Sugar, who runs the Apprentice program, and from Donald Trump, who does the American version of it. And let's steal an idea from Jeff Bezos, the world's richest man, who's a billionaire, who used to be a hedge fund manager at DE Short and then investing in a technology called Amazon. So why aren't we investing in this technology? Let's create this technology. We called it Project pipspredator, which then tells us through this arrow and the line, buy when the price goes above the horizontal line, because that confirms this price momentum and the odds of a profitable move have increased. The arrow alerts you on where to look for a signal for ease and convenience. Up arrow, of course, means buy. Okay, that was it. That to us was the Google of trading. Like Google, it's an algorithm which searches. Google searches the internet to give you information. This searches all of these other products to tell you, right, this is where we're seeing trends. But the question arises, which is the most lucrative time to trade on? This is probably the most important slide. So watch this. I'll show you how to download it as well if you wish in a minute. Jonathan, Kevin, Patrick, Nilesh, give me a second. Okay. The 1 hour time frame we found was the most lucrative. Why the 1 hour time frame? Let's take the DAX. Okay, you get a signal about every day or so in the 1 hour time frame. So if you've got a day job, we think that's ideal. But more importantly, mathematically, from a business perspective, it's the best for you because the number of trades in a month that we took, not that was signaled at 3 in the morning in a product we weren't looking at, that's no good. And I certainly don't want a bloody alarm on my phone call at 3 in the morning saying, buy Australian dollar now. You know, I've got baby's nappies to be changing instead. These were the trades we took within the hours we were trading. Okay, you don't have to take every trade out there. 25 in a month. However, and I want you to learn this is really important. Some months there might be as many as 40 trades, for instance, when the markets were particularly volatile like Brexit or Trump. And some months it might be as few as, say, 16 trades. That's fine, doesn't matter. What matters is this important number, 2,250 net pips captured in a month on average. What's net pips? That's the winning points minus losing ones. Pips is the language of trading, okay? The winning ones, profitable ones minus losing ones, the net profitable ones. However, again, the variance was huge. Some months it might be as high as, say, 4,000 points captured. Others, it might be as low as 0. But remember what I said, the months in which you make more, you take the money and save it for the months in which you make less, so that in the end, you're ironing out the peaks and troughs and getting some level of consistency of 500 to 1,000 a month. But wait a minute. The best winning streak we had was 70 winning trades out of 100. The worst winning streak we had was 30 out of 100. That number, as you'll see in a second, doesn't matter. The number that matters is 2,250. The typical maximum loss on any one trade was 50 points or 50 pips was the typical maximum loss. Now, if you were trading £2 or £2 or $2 a point, whether you're doing CFDs, futures, options, it can all be translated into pounds or points per pip, dollars per pip. Let's say you're doing 2, then you would be losing $100 or pounds on any one trade. That's way too much. That's way too much. But bear with me a second. 2 times 2,250 is actually profits of 4,500 a month. Okay. Well, wait a minute. I said we're aiming for 500 a month. 500 a month is our target, 10% of this. Therefore, we knew we didn't have to tell people trade with £2 a month. Instead, we could tell them to do with 20 pence. And there's brokers which will let you do as little as 7 pence or 7 cents a point. Those are the best brokers to trade with. So if you can start small with 20 pence, then any mistakes you make, that's fine. But guess what? 20 pence a point means the most you're going to lose is not £100, but £10. So you're not going to lose sleep over it. So you're not going to panic. You're not going to be stressed. But even better, you're still going to be able to hit your target of 500 a month. This is how we knew we've got something which is the Google of trading. We've got something which private investors can use. Mass market is relevant. But why would that be relevant to a hedge fund? Only if we could turn it into a Google type billion-dollar business. And that's our ambition, to turn it into a billion-dollar software. Okay, it's billion-dollar technology. So we asked people, what do you want? They said, well, we love what you're saying, Alpesh. We want access to you, but we don't want to pay for something every day, every week, every month, because that'll take money out of, we've only got $1,000, $2,000 to trade with. So we don't want to be giving that away every day, every week, every month in subscription. I said, fine. They said, we want access to a qualified hedge fund manager, i.e. you, who's professionally trained communicator. So we're not bored, right? As a TV presenter for Bloomberg on my own show, I was professionally trained by them. I'm also a barrister, so professionally trained by them. Okay, paid by Bloomberg and or Financial Times, i.e. credible brands. Well, Financial Times would pay me for my Diary of an Internet Trader news column each week. If you're interested, what? £1 a word, 750 words a week, £1 a word. My wife says that's why I talk so much. Bloomberg would pay me for my TV show each month. I'm not going to tell you how much because I was getting paid more than full-time presenters, and they still might resent me for it. They said, we want somebody who does academic research and development. Well, I was a visiting fellow at Corpus Christi College, Oxford, where I lectured on behavioral finance. Still use those know-how bits to update, upgrade things, help people improve. I'm somebody who's won awards. I don't mean awards, fake awards for best education. Anybody you ever see who says they've won it for best trading education, they're fraudsters. You know how I know this? Either the person awarding them is fraudulent, doesn't exist, or they've paid the advertising company who's then given them the award. So they've paid xyz.com, who they advertise with, who suddenly says best education provider. Okay, no, you want somebody who's won awards in the Financial Times like me for calling the market right. Okay, so people said that's what we want. I said, fine, I'll give you all of that, and I'll give you the software as well. Because we said, if we're going to create $1 billion technology, you've got to give something which everybody wants. Everybody wants. So the main questions are, I'll show you how to download it. Give me 5 minutes. Okay, can it make money? Well, I'll show you some more profitable trades in a second. Is it easy? Yes, because you're just following. You're watching the screen 15 minutes a day, before and after work. You can be longer if you want. When to enter, when to exit. And the idea is, as with all trading manually, but I'm saying we're not doing this manually. We're doing it. Look, the DAX is at the highest it's been, okay, all webinar. So that's good news. You're all making me money as it is. And I told you the DAX is lovely. So you've got the buy signal there. It's going up and up and up. Thank you, all of you on this webinar. I'm not going to share the profits with you. This is just the 1 hour time frame. Now, we were long on that. Those who watched the webinar a couple of days ago know we were long on that back then on the DAX. And I was banging on about how good the DAX is. I haven't done anything for 2 days, and it's just gone up and up and up. That's what good trading is about. It should be so simple that it tells you where to add to your winning position, tells you where the stop loss is, SL, tells you if you trade 7 pence a pip, then you could risk £100 if your stop loss is hit. So you might say, oh, actually, I better cut back on my risk or whatever else. Okay, we'll come back to that in a second. How much does it make? Well, I've shown you that, but I'll show you some more in a second. Does it make life easier? We created this for the apprentices in my firm. When we were taking on new people into my hedge fund, we created the software, we created the technology, so to help them learn. Because like any firm, whether it's a Goldman Sachs or anybody else, people need to be brought on through human resources and learn. Are there checklists and simple rules? I'll give you the same manual that I give, a very simple manual that I give new people in my hedge fund. You'll have direct personal access to me one-to-one. And I'll tell you what our global ambitions with this are and how we're going to turn it into $1 billion company and float it on NASDAQ next year. I'll show you that in a second. These are what some of the apprentices using the indicator came back to us with. This is euro dollar, 5-minute bars. I don't like 5-minute bars, but my apprentices don't always listen to me. So they sent me this. They've got to send me this. Well, they don't have to, but if they send it to me, I can then advise them, look over their shoulder, tell them, do this, don't do this, do this. Okay, over a 3-hour time frame, 75 pips, including adding to winning positions, remember. 75 times $30 a pip, $2,250. Why $30 a pip? Why so large? Well, when you're consistently profitable and you're confident, you increase your trade size. But only then, not to begin with. Not to begin with. That's why so much in so little time. Euro dollars, 15-minute bars, over 9 hours, 73 pips, including additional winning position, 73 times $30, $2,190. Boom, boom, boom. Okay? Similarly, more of these, but I'm not going to go through all of these. What I am going to do is this. Who's behind the strategy? Well, let me put it this way.
This was an endorsement for the strategy by the chairman of the Chicago Board of Trade, by the chairman of the world's largest exchange. And he wrote it in print. So it's not just Mrs. Jones from Croydon or Mr. Smith from Manchester or some fake actor. This is somebody who's written it in print from the world's largest exchange. Gets to the heart of the matter of trading by clearly elucidating the methodologies of successful strategies. Clearly elucidating the methodologies of successful trading strategies. That's one hell of an endorsement, okay? That's how you know the principles and what I'm talking about are the ones which work. Because I want people to go from this to this. I want them to go from this to this. That's the ambition, okay? That's what I want. At the moment, without an indicator, without something like this, the major problem people are doing is they're trading like this. They're following news, or they're just they're too complicated. They're trying to do Fibonacci, Elliott waves. They're sitting in front of the computer screen all day long, which if you want to do as a geek, that's fine. But don't do it thinking you're earning an income. You need to automate. You need power, you need machinery. And in the modern world, the intelligent thing to do, what the clever money does, is the equivalent of a JCB digger is something which allows to scan all of this, every single thing, real time, live, all the time. You're not paying anything every day, every week, every month, which otherwise would take money out of your pocket, and then says to you, yep, we're long on Australian dollar, New Zealand dollar, for instance, and does the hard work for you. That's what we do in every other aspect of our lives. But for some reason, people don't do it in trading. Okay. And what about regular people? Well, Bhikkhu used to work at Barclays Bank in London, now lives in Dubai after getting married. I love the pipspredator. It's really simplified my trading as a beginner. Actually, his quote's a bit bigger than that, but I'm just showing you those bits. Okay. What I want to do, my ambition is to get a cohort of what I call charter members using this indicator. We're then taking it to the stock market. Before that, we're taking it to Google Ventures, Sequoia Capital, Amazon Ventures to be venture capital investors. Once we get to 1,000 people licensing this software, using it, okay, and we've got 600 so far through it, and I take them in batches of 25 at a time, okay, so I can manage them and handle them. Then once we get to 1,000, the company will have a valuation at which the venture capitalists will invest. All right. So just the background, you don't care about the background. So I take them in groups of 25 at any given time. And I've got 75 I'm actively mentoring at any given time. We've had 600 go through the program and get them to profitability. Some 10% give up and say, you know what, trading's not for me. And that's fine. That's fine. That's going to happen in anything. You know, my mum still can't drive, even though she had loads of driving lessons. It's the same issue. And what I do is I take them, I say to them, look, don't try it for 7 days. Don't try it for 14. Don't try it for 21. Try it for 30 days. 100% money back guarantee, because it solves all the problems that I mentioned in the webinar that you need to do. Solves all the problems. It allows you to trend follow like all the biggest hedge fund managers, and it allows you to copy what we do. We have 10 algorithms in our hedge fund. This is the first and oldest one that we used. And people say, oh, but wait a minute, it's your secret sauce. No, you don't have you're licensing the software. You don't have the intellectual property of what the coding is. That we keep, but it is multiple indicators, multiple timeframes, price confirmation. And it's a $5 trillion a day market. If you happen to be trading exactly the same thing at the same time as me, well, you and I are drops in the ocean. It's not going to make a difference. Okay. So not 7, not 14, not 21, 30 days, try it out. And for doing me the honor of trying it out, I'm going to give everybody who tries it out, well, there's only 25 licenses at a time. Everybody who's on those 25 licenses, signed copies of my 2 most recent trading books just to keep those for doing me the honor of trying it out. Okay. And the only thing I ask for you in return is for the venture capital investors, give them an honest opinion and say, yeah, it's great, made me profitable, or say, no, you know what? Too complicated for me, or whatever. Couldn't be bothered, blah, blah, blah. But that's all I ask, okay? That's all I ask of you, okay? Is that I limit it to 25 licenses per event whenever I've got time, for this simple reason. It ensures high quality mentoring by me. I've got about 75 apprentices at any given time who I'm getting emails from. I get about 3 emails a day. That's it. Why don't I get more emails from those 75 apprentices? And what about the others who've gone through the program? Well, you've got lifetime access to me anyway, so you can always come back to me anytime. But if you're making profit, then why would you bother me? If you're making profits, you don't need to. But you've got direct one-to-one access with me. You can come and meet me as well. I'm there to look over your shoulder. There's no monthly fee, no daily fee, no weekly fee. There's no upgrade cost. All upgrades are free for life, lifetime mentoring. And the reason I did that way is for this very, very simple reason. If you're good, Alpesh, at what you're saying, and this is so brilliant, and you've got this public profile whereby you can promote it, you can talk about it, you can make it into a public company, you can make it into a Dyson or a Virgin or whatever else,
then why are you not giving us lifetime access? So I said, I will. Why are you not giving us lifetime access to you? And I said, I will, because guess what? If you're profitable, you won't need to bother me because you're profitable. You're busy making profits. If you're busy making profits, why would you be in touch with me? So I said, I'll give you lifetime access. Nobody else does that on the planet, because I thought, how do I differentiate myself from all those other people? I said, very simple. I've got something they haven't. I've got honesty. I know I'm going to make people profitable. So I can say to them, you got lifetime access to me without having to pay for anything, lifetime mentoring. But it goes beyond that. I stole an idea from my alma mater, okay, which is this. You'll have emails from me each day of what I read and mentoring emails, videos by me, bite size on every aspect that I've discussed. So you've got ample time to pour over all this. You've got a mentoring website and a community site where you can post questions amongst a community of all the people on here whose questions I then answer. So you're all learning from each other all the time. And you'll see the trades we're doing and my monthly newsletter. So daily what I'm reading, if you want all of this, it's all in there. Or some will just say, just give me the indicator. I just want to get the software and trade. There's a bite-sized course. If you want to be a hedge fund manager, you've got access to me on LinkedIn. I'll introduce you to people. You can add me to your CV as well. Okay. Like I said, trading manual, articles, all of this, my books to keep. We want to create $1 billion company. It's as simple as that. And I think we've got the Google of trading. There is no ongoing charges. Why? Because I'm building that initial 1,000 people charter member group to take to the venture capitalists. So you're all doing me a favor. So why would I charge you each day, each week, each month? And that's why you get to keep my books as well. What we do, however, and it's a 30-day money-back guarantee, Louise, don't worry. What we do, and you get the signed copies of my books, is this. In future, not for you guys who sign up to it, in future, the plan is when we take it public is £2,000 a year for the mentoring, £2,000 a year for the indicator. At the moment, mentoring, indicator, all in one for you guys, okay? So don't worry about that. It's all in one, and it's all included because we're in the initial phases, all right? And it's first come, first serve. As long as you're keen, the only thing I ask is that I want you to be keen. I want you to be keen, okay? Is Milo, thank you very much. Aiden, no problem. I'll email you, okay? And the best student I've ever had, I've got to show you the best student. I'll show you the mentoring site in a second because it's really important you learn how to learn to trade. This is the best student I ever had. Naomi left university at the age of 21. She came to work for me as my assistant for 3 years. After that, she joined Newton. Today, she manages £1 billion of assets under management at Newton. Okay. University, worked for me at Profinium for 3 years, then Newton. I'm going to take some bloody credit for her being that good. All right, for her being that good. Let me show you. I want to show you something. I want to show you let me show you this. Tobias, it works on PC and Mac, so no issues there. Patrick, you can use it on all those currency pairs. There is no daily charge, no weekly charge, no monthly charge, no upgrades. There's no upsell, so don't worry about any of that. Nobody's going to hit you with a $500 or $1,000. To unleash that, you're not profitable. You've got to pay for this. No. And each week you get to see the trades I'm doing, and you get my monthly newsletter. And each day you get to see what I'm reading, and you get to see what I'm looking at, and you get to communicate with me directly, which I'll show you in a second. When you go here, you will see up here it's secure. There's a padlock. When you click on add to cart, okay, you will see there's two choices. You can either go to PayPal. If you like PayPal, if you're using American Express, you have to go via PayPal. You don't need a PayPal account to use PayPal, and it sounds odd. Okay, or MasterCard, Visa, that's entirely fine. All right. And you've got a 30-day no quibble money back guarantee. Okay, so within 30 days at any point, Glenn, you can say to me, you know what, it's not for me. As soon as you've paid, you'll get direct access to download it. You can start downloading, and we can install it for you remotely if you wish. We've got an IT team who will do that. So you can download and install. But we will do it for you if you wish as well. Okay, so there's no worries there. John T, you are on. So is Janet. Tiggy, I can see that yours has gone through, and Himesh as well. Edwin, I can see you. I'm waiting if we've got a Louis. Since that's an important name. Okay. Jane, my pleasure. Thank you very much. And I hope to see you in Stockholm at some point as well. It takes about 10 minutes to install, Brian. It takes about 10 minutes to install, but we can do it for you if you wish. And then I'm looking over your shoulder because I can see what you can see and you're looking over mine. But anytime you have any problems, you just question, you send me an email or meet me. My offices are on Brook Street, but I'll do better than that. Let me show you something, okay? And I want to know, is there a single thing which stopping you from being profitable? Is there anything that I have not covered where you think, you know what, Alpesh, the reason I can't be profitable is for this, this, this. There's a mentoring website. I really want to draw this. I'm really proud of this. We have a dedicated mentoring website just for apprentices. And what I love about this mentoring website is, other than the fact that we've got a great client list, past and present client list, is we've got IT support 24/7 as well, and they'll arrange to install the indicator if there's any problems. We've got great testimonials. Where are they? No, you haven't. Yes, we have. They take a while to pop up. There we go. As well. And I'm really proud of the fact that even when some people, look at this from Vinod, I am very impressed with the level of help and assistance. I'm really proud of the fact that if we're going to create $1 billion business, it can't just be, here's a piece of software, now bugger off. It has to be people really feel the brand. They really love it. I want them to love it as much as a Google or an Amazon, okay, or an Apple. Because otherwise you can't create $1 billion company. You just cannot, okay? It's got to be that good. It's not just that the product works. It has to be that people really feel, all right? And I'm going to even put the negative comments. Look, after 1 month of using, I'm up just 5%, which it seems to me very few. So my comment is, Alpesh, no pleasing some people. He felt 5% in a month or 60% in a year is not enough. And I'm, well, you're all right. You know, you're a beginner and you're not happy. But the other thing is, let me show you this right at the bottom of that screen. Really important. 84 Brook Street. Come and see me at my offices in Mayfair. Make an appointment. You've got access to via email to me and the team. You've also got, as you can see here, direct 24/7 phone line numbers and Skype numbers. So Skype me. If I'm on Skype, we can have a chat. Otherwise, my customer support team, they'll get the message across to me, okay? And the other thing I need you to do, some of you are interested in this for your career or for your children or whatever else, connect with me on LinkedIn. It's free. But what that'll allow you to do is see all my networks, all the banks and all the people I'm connected to, and I'll introduce you to anybody. If you're an apprentice, only for apprentices, please. Only for apprentices, please, okay? Reggie, you are through. I'm just looking at some others. I'll give you a name and a shout out. Kanti, you are through as well. So is Sanjeev. Somebody called Garfield. Is that really your name or did you just put that down? But anyway, Garfield is through and so is Masood. Masood, I can see you've gone through. I'm excited as well, Masood. I'm excited because you're excited. Okay, I want people to be excited. Now, what you're going to see on LinkedIn, and I'll connect you with anybody because that's part of the mentoring. The mentoring is, look, I'll connect you to anybody and everybody you need. But you'll also see on the mentoring website, the 12-week course, which I created as really bite-size. Okay, and through this, we learned what accelerated people's education. Now, this is important. Whenever you're learning to trade, you need to accelerate your education. So how do you accelerate? Well, every Saturday, I do live webinars for people. Okay, 11 a.m. on stop losses, 12 o'clock on entries, 1 o'clock on limit orders, 2 o'clock on money management, 3 o'clock on trading psychology, 4 o'clock on adding to winners. Okay, so when you sign up, guys, just let me, thank you, Glenn. Okay, let me know and I'll give you a shout out. Okay, so what we found is by having that regular direct contact with me, even if they're watching it over and over and over again, just like when you do math, you do the problem over and over again. What we realized is that increased people's likelihood of success. Robert, all updates are free for life. There are no up costs. You can't get just the indicator without the mentoring. They're all part and parcel. Not for you guys, but in future, it'll be £2,000 a year for mentoring, £2,000 a year for the indicator. At the moment, it's all part and parcel of the same thing. Okay, the same cost. It's just $1,000 one-off fee. So we found that accelerated people's learnings, those Saturday webinars. We also found another great way to accelerate your education. So that's why we do it for apprentices, is we have them fill out a questionnaire. So it's bespoke. And in this questionnaire, using Google Forms, and I get the answer, then I can see, Michael, you need to focus on stop losses, which is this bit, this bit, this bit. Stephen, you need to focus on trading psychology, so I can make it bespoke to them and realize what their strengths are, their weaknesses are, the opportunities and the threats to their trading business in a way. Okay, so what that is, it's a SWOT analysis. And we can do that because you've got this question. Now, you don't have to do any of this. You might just take the indicator and you might say, bugger off, Alpesh, all I'm interested in is doing this and trading. And you might even go nuts, not listen to me as Toby is. And where's Apple? 1 minute bars he's doing, right? So I put the 1 minute bars on. All right. Yeah. Thanks for that, Toby.
So this is Toby. I don't recommend the 1 minute bars, but there you go. He's looked at Apple and he said, no, I'm going to use the indicator, go short. Now you can see it's dropping. So Toby's doing rather well. Well done. Congratulations. Okay. I don't recommend the 1 minute time frame because I don't think the moves are big enough for you. But anyway, and you might just trade off the back of that. All right. And that's entirely up to you. Okay. And you see the price, you go, right, buy, sell, whatever. And that's fine. My point is, it's got that flexibility to use across any time frame, but that's not the point. The point is, ideally, I want you to listen to me. But yeah, I see people, you know, it's like I give somebody, I don't know, a sports car and they go too fast. So we realized that the questionnaire was ideal. The Saturday webinars were ideal. The other thing we found, and we created these in bite size in the 12-week course, and you can start and finish the 12-week course when you want. It's yours for life, like the indicator. It's yours for life. What we discovered, and put your names up as you sign up so I can give you a shout out. What we discovered, Kevin, Matt, Tommy, Hasu, you are all through. You are all through. Harjeev and Trev, you're through as well. I can see it's gone through. If you're having any problems, try the PayPal link. That might be easy. You don't need PayPal to do it. I can see a couple of you are stuck on the page. It's still, I think there's still a few left, so you should be all right. Glenn, delighted you're on board as well. If you're in London, let's meet up. If you're in London, Malaysia, Singapore, or Hong Kong, let me know, because I'm in all those places very regularly with the hedge fund. So what we found was not just the Saturday, not just the mentoring, but we also found the cheat sheets. Now, cheat sheets meant, and I created these for you, they're all done by me. This is my pet project, so it's all created by me. And I want all apprentices, I've spoken to my lawyers, when we float this, I want all apprentices to have free shares. And we're discussing how we do that. There's slight little legal niggles with that, but there's going to be one way or another. I want them all to have, Thomas, brilliant. I want them all to have free shares in the company. Because after all, they're part of the journey. They helped me get it there. Okay. Oh, sorry, Owen. I've removed it, haven't I? It is Alpesh Patel, sorry about that, Owen, / here. I'm such an idiot. There we go. All right. Was the cheat sheets. What the cheat sheets did is they put into a format where you could at 3 a.m, if you wanted, through the mentoring website, see everything that I've said. So you didn't have to watch videos. Some people don't like videos. So we looked at all the ways into which to accelerate your education, even going to the basics of how do I decide how much to trade, how many pounds per point, see that 7 pence a point, where's the stop loss in pips. So it explained all that. So you didn't even have to wait for me if you didn't want. This is why people don't bother me, because they look at this and they go, oh, yeah, I see what that is, Alpesh. Oh, thanks. I don't need your help. Oh, what's the difference between fixed and trailing stops? Oh, right. I see it. And we wanted to make sure they got this straight from me, a fund manager, not from teachers and all the rest of it. So all those things accelerated people's learnings. But actually, the most important thing was, one of the most important things was simply that they downloaded the indicator and, used the manual that comes with it and started trading. But like I said, any problems, and they could simply message me and do it. Thomas has said, thank you for the books and card. Yes, you got a handwritten note from me as well. So hope that's fine. If anybody's still on the edge, if there's any questions I've not answered, if there's any questions you have in your head as to why you would not be successful and profitable, please tell me, because as a software business, I'd want to know, okay, why you do not think you'd be successful. There's Facebook. I think, Pritpal, you mentioned Facebook earlier on. And you're absolutely right, and there it is. And we captured it just beforehand. And this is where we are at the moment. Now, don't forget, I've got a long holding in Facebook. So we didn't take this short-term trade because I've already got a buy position. I don't want to concentrate and more to that position, okay, because it's already in there. If there's anything I've missed on why you would not be profitable with this, but if there's anything I missed generally, please let me know as well, because I don't want anybody ever on all of this ever to say to me, oh, Alpesh, you didn't answer every question, you didn't do this, you didn't do that. Anything that you've not understood, anything you've not appreciated, just let me know. My principle with all of this has always been, I want 100% satisfaction from people. I want them to be profitable. I want them to say everything that I'm doing, that, yeah, I love it, because that's the only way you create $1 billion technology. And that means one way or another, my hedge fund's going to have $1 billion, whether it's because people are investing with us because they think we're better than Goldman Sachs, which I think we are, or because they say, hey, the investments you created yourself and have made are worth that. Okay, it's as simple as that. I've got a question from Paul. What does an order number look like? Well, actually, once you pay, it'll go through to a page where you get the username and password, and I'll email all apprentices my private email address and username and password as well. So you've always got that, and I'll give you that in a second. Anybody who's still on the edge about this, Do I trade when you trade? No. Vit, you can trade whenever. See, you and I, we're both going to be looking at the same thing. We're looking at the same pages. So you don't have to trade when I'm trading. You might pick your own trades. That's the whole point of it. Brilliant question, by the way, Vit. I didn't even think about it. The best questions come from people and things that I've not thought about. Let's say you saw this and I didn't, because maybe I was on holiday. Maybe I was sleeping. The indicator is giving you trends. And you place them because you might be on a different time zone. We've got 80% of the people in the UK. We've got, out of the other 20%, Singapore, South Africa, Australia, New Zealand, Canada, and the United States, and Mexico, actually, funnily enough. The most unusual place, we've got somebody from Borneo and somebody from Brunei as well, which is very unusual, but there you are. There, we've got it. Okay, the point is you could be placing trades on anything because you're going to get this same setup. We're going to set this up for you. Okay, you'll get the same live real-time data that I do. And then what you're going to do is you can trade whenever you want. If you want to trade the same time as me and what we're looking at, I'll tell you what I'm looking at. And that's fine as well. Roger, delighted that you've joined up as well. What I want to make sure, all of you who are signing up, okay, what I want to make sure is keep in communication with me. If you've got any issues, any difficulties, you don't understand something in the manual or in the 30-day course, or whatever, or in the 12-week course, you let me know, and you can start and finish those whenever you want. There's not set times for classrooms, because what we realized is people learn the most when they do it at their own pace, in their own time, and they have one-to-one private tuition. Private tuition with me, one-to-one at your own time and pace. So some people say to me, oh, Alpesh, I can't do it at this time. I say, that's fine. Come back to me whenever you can. We've got people who all might sign up today, but some will be slower than others, faster than others. It's private tuition from me. Now you might say, bloody hell, Alpesh, that's ridiculous. You're giving, where do you find the time? Guess what? The materials I'm going to give you will give you ample information. You won't actually have that many questions for me. But if you did, that's fine. Because I've got a phone as well. And like you, I'm addicted to my phone. So you got a question, I'll go, just look at this. Do. You're in personal contact with me because I got to get you to profitability. The more of you who get to profitability, the closer I get to $1 billion valuation. Simple as that. Think about it. If I get 1,000 people to profitability, okay, what's the value of the company to a venture capitalist? Well, it's got global potential. It is a Google. Should be worth $1 billion, shouldn't it? Of course it should. You get 1,000 people to profitability. Of course it bloody should. And that's what we're here to do. We'll give you the software so you can do it, but it gets better. We also give you the same training. Where's it gone? The same training that I give new people in my firm, which is this. Okay, I'm going to give you the same 30-day course. Okay, you're going to get access to this course, right? That new people in my firm get. So every month you get the newsletter, every day you get what I'm reading, every week you get the trades I'm placing, but you get this structured modular course. And you don't have to do any of the courses. It's just that some people like to do it, because if you get the software and the manual, that's enough. Okay. That's fine, Vit. Just send me your email so I'll hold the place for you. If anybody else is on the edge like Vit, send me your email address so I can hold a place for you, or I'll send you an email and it's going to make it that much more sexy and exciting for you. Okay, so if you're on the edge, let me know in the chat box you're on the edge. I'll have your email already, and I will send you an email in about 10 minutes to get you off the edge and into it. Okay, and show you why you should be really excited. So module 1, you got all these modules, and the idea here is if you want to learn more and more and more, trust me, you'll have unlimited education, because it's all updated all the time from me. All of these videos, articles, everything, they're written by me, and they're yours for life, including test your knowledge at the end of each one, review slides and everything else. Module 3, knowing when to buy and sell, top rules of the pros. And I kept these all bite size as well, 6 minutes, 48 seconds, 3 minutes, 49, and so on. And the idea is we realized also, if it's bite size, people learn. Okay, it's a lot easier. Husmut, thank you very much. Look forward to seeing you on the other side as well. I'll email you. Delighted you're on board as well. Module 4, trading strategies for profit and so on. Some people said, Alpesh, I want videos. Some people said, I don't want any education. I just want the software. Some said, I want mentoring. Some said, I don't want mentoring on your strategy. I want mentoring more generally. I said, whatever it takes to get you to profitability, we've got to be able to provide that ease, that convenience, because in the 21st century, that's how businesses become billion-dollar businesses. They provide every methodology, every approach, every way of doing it. So that's what we're doing. Now, in future, obviously, there's no way you can get an unlimited number of people on board unless you've got lots more tutors. You will always have me as the first, thousand group of the first 1,000 in groups of 25 will always have me as your tutor. always for life. Once we get past that 1,000, there's going to be other tutors for other people, but not for you, because you're my original charter group. So you'll always have me. You're part of the golden 1,000 club, or whatever you want to, flash name you want to give it. Okay. Jules. Oh, don't worry if you've got no experience, Jules. This is meant for beginners who've got no experience as well. I mean, the whole point of it, it's meant that I do it. Ben, don't worry. I'll hold a place for you. Don't worry about that at all. Jules, we've got lots of beginners. In fact, 80% of people are beginners, because you know what they want to find out? They're afraid of trading. So what they want to find out is this really for me? So what we do is we teach them things like what's a Forex quote? How does it work? How does the market work? They don't even have to risk real money. They can start with a demo account, so they can see. So they know once and for all for the rest of their lives, yeah, I didn't miss something. I didn't miss out on something. Either they'll know it's for them, it's not for them. Either way. But because it's a 30-day money-back guarantee, it's fine by us, because we actually want the statistics also on. It's important for us as a technology house. How many people complete, how many get profitable, how many give up, 10% give up within 30 days, and that's fine. Jules, if that's you, don't worry about it. Honestly, you should never feel bad about any of those things. If trading's not for you and you discover, actually, it's not, I'm a total beginner, there's easier ways, that's fine as well. Okay, it has to be focused on you, not on focus what makes our life easier, what makes your life easier. Okay, are there any questions that I've left at all? If there are not, I'm going to go to my apprentices, because you get the bulk of my time, my friends. My apprentices get all my time, as you would expect. Okay, there's the URL. Some have asked for the URL. There it is. We are still long Australian dollar, Swiss franc. It's at the same price it was when we entered, actually. It's got a bit more. There it is. Where's it gone? Australian dollar. My mouse is playing up. There it is. It's still at the same price it was pretty much when I entered. It's at the same entry price. So that's fine. Where's the Amazon one gone? Oops, there's your Amazon, which is the green arrow. Oh, it shot up. Have I missed something? No, I haven't missed anything. I was going to say, did I miss something? I haven't missed anything. I think we discussed Amazon earlier, didn't I? Or have I not shown Amazon so far? Okay, well, that's been phenomenal. I should say with Amazon, I don't think I've shown Amazon. I've got a long position in Amazon. So we've only been doing the short trades on Amazon. So that long trade is not one for us, for the simple reason we've already got a long position in Amazon from before. Instead, the ones we've been doing, and you guys will know this. Oh, actually, let me, somebody just said, can you show us your other trades in Amazon? Let me just show you that. So that was the long trade. Well, we're already long position. It's the short ones we've been doing. Why the short ones in Amazon before that, whenever we got those? Well, because I already had a long position. So if I can in the short term sell, and you saw this in the last webinar, I did this. Okay. Then what happens is that we make the profits by selling short. And now I've made profits by going long. So I've made profits on Amazon on both sides, which has accelerated my income. Let's put it that way. Because look, Amazon's where it was when we went short. All it's done is move sideways, except in that time frame. Sorry, let me just zoom out, because let me zoom out so you can see more. There you go. You can see what the indicator's done with Amazon. Okay, there you go. We had the long trade, right? And then the short trade. Now the short one's the profitable one. Okay, and then the long one is profitable for the long term anyway, because we had a long term holding. Okay, so that's how we like to trade tech stock. I like to trade tech stocks. Okay, that's how I like to trade tech stocks. Anyway, that's been great for me. So thank you all on the webinar for that one. I've got a question on Apple. Somebody just said, well, you showed us Apple 1 minute bars. How does it work on the minute? Let me look. I don't trade the minute bars. Let's have a look. Okay, so that's what I showed you earlier, and now it's gone even further low, which is great. Okay, so maybe you trade Apple. You can see there where you were supposed to double down. I don't say you do it on the 1 minute bars. We'd like to do further time frames, but there it is. Not every trade's winning. It's not meant to be. I'm just saying, we've got some good trends while you've been on here. Aiden, I'll send you a link, so don't worry. Everybody who's on the edge, just let me know, and I'll send you an email to get you off the edge. Aiden, everyone, I'll send you a replay link for the webinar as well, because some of you have had IT issues, like Aiden has had IT issues. So don't worry, Aiden. I'll send you that, and I'll send you an email. No worries on that as well. Apprentices, looking forward to seeing you on the other side and for you to start in 10 minutes doing trades like this, basically. Obviously, some will take longer than others. Don't worry. Okay, we want to get you seeing the markets moving and getting you on board. Give me 10 minutes. Everybody, I'll send you an email. Keep an eye out on your inbox. And thank you very much for listening to the webinar. Okay, really appreciate it. Let me do something else. Let me show you my face. Okay, thank you all. You've seen the ambitions of what we're trying to do, and that's why I do this personally. It is my personal hobby. It is my personal baby. I want this to be $1 billion business, because otherwise, why be in business if you're just going to do it for fun? Okay, I think we've got the Google of trading. I think we've got the greatest technology company out there. It's what you'd expect Richard Branson to say about his airplanes. It's what you'd expect James Dyson to say about his Hoovers. Well, his vacuum cleaners. Well, that's what I think we've got here. I think we've got something special, amazing. And then it occurred to me, well, why would we keep this to ourselves when we could make even more as a technology company, just as Jeff Bezos did with Amazon? And that's the principle. Love you guys. Apprentices, really love you guys, especially. Thank you all for listening. Anybody else on the edge, just send me give me a message. I'll send you an email on that. Thank you all so very much. And I don't know when the next webinar is, Brian. I don't know when the next one is, I'm afraid. When the next grouping will open. Saturday webinars, I'm afraid, are only for apprentices. Any other questions on my iPad down here? Tom, how do I pick a time frame to trade? And Lisa's asked, when do I add to a profitable position and when do I take profits? Tom, I think Jennifer asked a question like that as well. Well, actually, with the indicator, there's a very simple manual and a guide which teaches you all of that. So don't worry. And you've also got direct access to me. So don't worry. Thank you, John, my friend. I really appreciate it. When I get nice comments like that, it really does motivate. Thank you, my friend. Thank you very much. It's very kind of you. I really do appreciate it. It makes it all worthwhile. Thank you. Yeah, so there's a manual which tells you everything that I've gone into as well, and little videos. Some people like videos, some people like written text, but I'm there as well. So if there's anything you didn't find and you think, oh, Alpesh, I couldn't find it in the manual. That's never happened. But, you know, if you said, then I'll say to you, oh, just over here, just over there. Look at that. Look at this. That's what it is. Okay. Thank you, Roger. Thank you all. Thanks, everyone. I am going to leave you with the screen for it. And let's see, there we go. And I just want to say thanks, everyone, for this, Ben. Thank you. I do try to be down to earth. I hope I don't ever come across as arrogant. I do try to be down to earth and just say it the way it is, because, you know, when you've been in the industry for 20 years, you've seen it all. You know what works, you know what doesn't, and therefore you're able, through experience, and I've got a few gray hairs, to do that. So anyway, thanks, everyone. Thanks, everyone, so much.